Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina, Senior Market Strategist. I am joined in studio by our senior economist, the fabulous Tracy Shuchart. Tracy, good morning. How are you?
Good morning, Jim. Good morning, chat. Doing good today.
Well, we have an awful lot of stuff to talk about. We got a lot of economic releases coming out. We had a lot of kind of reversals of fortune in a lot of the markets overnight. We have large candles in crude oil that we haven't seen in a while, which is refreshing and should result in some good opportunities for day traders as well. What hit you overnight, Tracy?
So last night, the big deal was there were two tankers that caught fire near the Strait of Hormuz. As you know, this is a big contention point. Everybody's arguing whether or not Iran will close the strait. And everybody was wondering if this had anything to do with the conflict. However, it was just that two tankers actually collided in the waters off the UAE and caught fire. So markets were a little rattled overnight. We have, 20% of global oil flows go through the strait. Obviously, traders are watching to see if Iran's going to close the strait. I've discussed this before. I think it highly unlikely, kind of as it would hamper Iran's own oil exports, and Beijing, being their largest customer, certainly wouldn't appreciate that. But as a result, we do have oil up this morning, almost 2%, and we have tanker rates surging. On the trade deal front, Trump left the G7 summit in Canada a day early without any new trade deals, and then posted this morning that EU is not offering a fair deal yet. So that's the update on trade deals. We had the BOJ met overnight. We had a kind of mildly hawkish reaction in yen assets after the BOJ stood pat on rates as expected. But they did announce that they're going to reduce the amount of bond purchases, tapering JPY by 200 billion with a B each quarter starting from April 2026. On the gold front news, we have central banks. There was a report out from the World Gold Council, and it said central banks are to keep buying more gold this year, and anticipates their holdings of U.S. dollar will fall over the next 5 years. A record 95% of more than 70 central banks that were surveyed expect to increase their gold holdings over the next 12 months. At the same time, Citibank came out with their gold report, and they say our work suggests gold returns to about 2,500 to 2,700 an ounce by the second half of 2026, driven by weaker investment demands and improving global growth prospects. JP Morgan came out and said they maintain their $4,000 call for 2026. So we have conflicting banks on the gold front. That said, we have FOMC meeting starts today. Yay. So we have on that front, we have 4 straight months of softer CPI prints, kind of have investors betting that Jerome Powell is going to be more than willing to signal cuts at this June meeting. That said, other analysts think that this is not going to happen, and the Fed is going to turn hawkish because of softening demand. Particularly what we should be watching today as far as the data is concerned, and I'll go into what data we have, but import prices are the first red flag. Early reads suggest that a tariff inclusive reading would indicate a near complete pass-through, which kind of reinforces the upside inflation risk. So we need to be watching import prices. We also need to be watching those retail sales for any signs of softness and disappointment. We haven't seen consumer momentum fall off a cliff yet, but it is retracing. So that's going to be very important, at least for the economists to look at. As far as what we should expect, listen to the dot plots is what everybody is saying. That's going to mean more than anything, even above and beyond what the statement was and what Powell says. So we will wait that and talk more about FOMC tomorrow. And then we also did have silver spiked overnight on no news. So looks like somebody got squeezed out of the market hard.
Tracy, let's circle back to crude oil because the rally really started on June 6th, and then we kind of popped out of a consolidation range, and then it seems like we're gaining momentum in terms of volatility and also in price escalation. I mean, the front month of WTI right now is 71.75. And as this moves up, if it does continue to move up, how concerned should we be with inflation here in the U.S. with the suggestion that crude oil prices, a $10 move in crude oil is going to result in a 1% inflation across the board by some estimates?
Well, if we look at the last time, oil prices were sustained high, like over $100, was in 2011. Now, if we saw that again, because of inflation, this is not hitting consumers just as hard as it once did. So $100 oil in 2011 is kind of worth $55 in today's prices. So consumers won't be hit as hard. That said, we will see this start factoring into inflation if we maintain higher oil prices for longer. So, oil is creeping up in price, but I don't think at $70 right now, you're probably not going to notice it that much. But, certainly if we, see $80, $90 oil and that holds, then we'll start to see that pass through inflation. So, a lot of this is elevated on risks right now, on geopolitical risk, even though we did see oil spike to 77 and it has, pulled back, but those are kind of overnight reactionary. If you take out those geopolitical spikes, I say we are still creeping higher out of the range that that $60 range that we've been in forever.
Yeah, it almost seems like this chart, the crude oil price acts as a better gauge of this, Middle East geopolitical stress than anything that anyone's tweeting anywhere in the universe. It seems like this is the market to keep an eye on.
Yeah, absolutely, absolutely. And, I still maintain my bullish stance. This market, fundamentally, it's a tight market. We haven't seen demand drop off that everybody was expecting because of the global recession. The market remains tight. It's just that sentiment has been so poor. But, we are starting to see CTAs start buying this market now. So if this starts to really rally, you're going to have CTAs chasing this market too. And so we could get much higher oil prices.
Yeah, I'm looking forward to my discussion with Jason Shapiro tomorrow on that front as well. Let's pivot over to gold now because the projections from the two banks are so vastly different. I haven't heard that till you just said it. I'm a little bit concerned with that right now. I mean, gold's tracking 3,400 right now in the front month of the futures contract. With, by the way, folks, if you're not trading gold futures, it's a great market. There's micro gold futures available as well. So a couple different flavors for you to consider. It's a fantastic market. But so Tracy, where I'm going is how could they be so divergent? Because I think you said 4,000 to 2,700. That's a big spread.
That is a very big spread. Personally, I don't know what Citibank works entail. But, if you're, we have this World Gold Council survey, and you have 95% of 70 central banks expect to increase their gold holdings over the next 12 months. That's actual physical demand. And this is what has been driving this market more so than anything, because it used to be kind of just a paper traded market. And now we're seeing, especially since 2022, the Russian invasion of Ukraine, we've seen central banks buying much more gold than they have in the past, and apparently they're expecting to buy more. So that is a fundamentally driven demand, and central banks don't care what price they buy at. If they want to buy it, they're just going to buy it, right? So that's why we still see buying even, now that we're at this $3,400 level.
Yeah, and that's the big elephant in the room, right? These are the deep pockets, and price they may be a little less sensitive to price. And if they get that thumbs up go from the board of directors or whoever's making the decisions, then that money's flowing into that market, and that's going to take primacy over what's happening in the futures or even the spot market in terms of price.
Absolutely.
So, all right, well, we'll keep our eye on that. The interest rates are, this whole 30-year Treasury bonds are back to a 113 handle. They've been incredibly volatile lately. It almost seems like there's really no direction right now. I mean, we're both of my key moving averages, and I'll talk about it there we go. We got a chart up. Both of my key moving averages are just tangled in love right now, the 8 and the 21 EMA on this chart. The casual observer might say, well, looks like we're slightly trending upward right now, but I don't know. We rejected these lows, or at least we tested these lows, the January lows in the 30-year bonds, and we kind of bounced back off. I guess what I'm thinking is what could affect the long end part of this curve, Tracy? I mean, with the Fed, their hands are going to be in their pocket most likely. And the geopolitical stress, I don't think is going away anytime soon. Tariff situation is not resolved. How do bond traders, think about this market now?
Well, I think everybody is focused on the shorter end, right? This is the longer end. Everybody hates it. It's like least liked. And so, I think that still, traders are going to be more active in the front end.
Yeah. All right. Well, we'll keep an eye on it. It's all about interest rates. It's all about yields. So we'll see how this moves today. But just as a side note, this is one of my favorite markets, Tracy. It's a great futures market to trade. I recommend everybody start with the 10-year note. It's a little bit more easy to deal with, a little less volatile, smaller tick size if you want to get introduced into the interest rate futures. And so, Tracy, we do have a special guest today. We have, Miad Kasravi is going to be with us today. Tell us a little bit about him.
So he is a trader and a macro analyst. I've followed him on Twitter for years. He has great insights. He's nailed the Bitcoin call, so we definitely need to talk to him about that. He also trades currencies, and so I know that our audience is not so big in the currency market, but maybe we can talk about it a little bit about it, and we can get some people more interested in the currency future market.
Oh yeah, no, the currency markets are great. No, I have a ton of questions right off the bat about the Bitcoin, as you know, is one of my favorites. Today I was kind of tracking a little bit what the equity market's doing. Sometimes it does, sometimes it doesn't. And the Forex markets are great. If you're trading over the counter Forex, think about trading the futures Forex. There's tons of benefits, and we could talk about that all day long. There's it's centralized exchange, centralized order book, transparent, all of that great stuff. So, so I'm looking forward to Maid coming on in a second.
Yeah, absolutely. Let's just go over the data schedule really quick, because we have a lot of data today. As you know, we have a kind of a short week because Thursday's a holiday, but not for futures traders. At 8:30, we've got retail sales, month over month, year over year. We've got import price index, export price index, New York Fed services index, 8:55 Red Book, 9:15 industrial production, 10 a.m. business and retail inventories, and NAHB housing market index. Again, everybody this morning is going to be watching those retail sales and the import price index. The Economist, anyway. I don't know if it's going to be necessarily market moving, but these are the data points that economists are looking at to kind of figure out what the Fed is going to do.
All right, there's a lot of bullet points on that chart right there. We'll look forward to talking to you at 8:30 to give us an update on what actually happens in those economic releases. So thank you for that, Tracy. All right, let's all right. Well, let's move over to the Edge report, and then we'll get to Miad. Hang tight. All right. Well, we already talked about the 30-year Treasury bond right now, so let's kind of go to the main event. Now, the E-mini S&P right now. Remember, we're trading in the September contract for the stock index futures. They have more volume. The pace of the roll is a little slower than I thought it was going to be. Pax was right yesterday. We have about 253,000 contracts traded in the September contract, 181,000 traded in the July contract. So that roll's still going on, but we're going to focus on the September contract. You have to do it sooner or later. On a daily chart, it's looking pretty impressive here. And remember, this daily chart's going to look a little different on the September contract than the June contract. It's a different contract, and the pricing is going to be a little bit different. And there's reasons for that, but the general idea is here, looking at this daily chart, is what's the trend? What are some important levels here for this contract? And right now, all the EMAs are sloping up very nicely here. This is still in a very bullish disposition. Right now, we're giving back a little bit of yesterday's gains, although we're fighting back toward the positive side, believe it or not. A little bit of a buyer's wick so far at the bottom of the daily candle. Stochastics are slightly underneath that magical 80 level, which you could say, well, it's no longer overbought. Let's get long. I don't know if I'd say that, but it is something to think about. Intraday, let's take a look at some targets here. And let me pull up my 30-minute chart really quickly here. So VWAP is a little less conspicuous today. We've been trading through that session VWAP. That's that white line through my chart, pretty much non-stop, every candle, just about, with the exception of a little bit of a lower market here, pre-market. Right now, we just crossed over that VWAP. We have plenty of targets. We have that JAX3 at 60.75. We have that JAX4 at 60.80. And then further along, JAX2 up at 6,100, nice even number, no surprise. On the downside for the bears, we have that JAX1 beckoning at 60.50 right there. We actually had a decent London initial balance. The highs of around 69, the lows around 45. So it was a decent run. It was a negative run, but then we kind of caught back up to where we started from. Volume profile is still a little bit immature and is still building. But the lows are in so far. A little double wick bottom here around 60.45. We have the one-day min at 60.35 for the bears. And then further down, we have that pivot, that S1 pivot, and that's approximately 60.24. High vol level at 60.20 on the downside. That's the story of the E-mini S&P. Let's shoot over to gold, though, because Tracy mentioned it, so we should talk about it a little bit more. Let me get my crosshairs in the right spot here. Daily candle. So what I did here, and this is the August contract, everybody, I drew a little bit of rectangle to suggest, right, we had 1, 2, 3, 4, 5 days of area resistance right here. I drew that rectangle all the way through and said, okay, maybe this is going to be support. Not really. We have a doji today. We're kind of trading below that. We're right at the bottom of my area of support resistance area zone right there. And we tap that 8 EMA right now. Now, everything's still looking a little bullish here, just from a daily technical analysis point of view. Stochastics, similar to the E-mini S&P, are just below that 80 level at 76.22. And then looking at some targets here for day traders, we have a lot of really great Mentor Q targets here. For the bulls, we have this JAX3 level at 34.20, JAX2 at 34.25, and then we have a pivot right above that, 34.27, and there's some room to grow until you get to JAX4 all the way up at 34.45. For the bears, we have JAX1 at 34 even, nice even number there. Zero DTE put support at 39.90, and then that one-day min. I love these one-day mins from Mentor Q. That's all the way down here, right next to the S1 also, which is part of the pivot study, 3378. That is today's Edge report. And we are ready to bring in our special guest today. We have Miad Kasravi, who is from Speculators Trading. And it's a pleasure to meet you, man. I've never met you before, and I appreciate you being here.
Hello, Jim. Hello, Tracy. Thanks for having me.
So, first question out of the box, I got to ask you about the Bitcoin. Now, we talk about over-the-counter forex and futures trading. I know there's a lot of central bank activity, which maybe could drive some of these currency pairs. And we have this cryptocurrency that we're tracking, but sometimes it tracks the equity markets nicely and the interest rate markets nicely, and sometimes it doesn't. What is the phenomenon do you think is going on there?
Bitcoin is an asset which has got a lot of hardcore lovers. So the people buy into it and they just hold on. And when they got a bit extra money, they put some more on it. And then you've got your macro and speculators. They jack the trend, right, Jim? So they get onto some of those trends and then get out again, get back in when they see the liquidity valves releasing. What we saw in April was some very interesting because early April, the tariff news tanked every market you can look at. S&P 500 actually dipped way lower than I expected, and many did. But Bitcoin was holding up really well, and that kind of gave us the indication where the holders they aren't really liquidating at these levels, and the buyers they were all stepping sort of back in. That kind of gives the indication that the long-term holders and the speculators are going hand in hand to buy that dip to kind of drive this higher. What we are currently seeing is more an environment where your long-term holders, they're just looking for more positions to add, and your speculators, they are waiting for a bit more euphoric. It's a very emotional driven market that might rhyme with a lot of the other futures market naturally, like the S&P 500. So when you see those moments where it's a bit more emotionally driven, either on the bearish side, that becomes a dip buying, or on the breakout side, it might sometimes become a false breakout. In this instance, we are more looking for accumulation in this phase.
Yeah, so do you expect this market to continue kind of in this sideways movement for a while? Because it seems like it's, kind of hit that 110 and hasn't really been able to get back over that.
It is hesitant, yeah, Tracy. I think what I'm seeing in the market is the reason it went up is still there. The macro drivers, the liquidity valves, they are still wide open. And we're not expecting this to change anytime soon. So I think the consolidation range is building up towards a top side breakout to attack the 120 handle.
And that traders would like that. That's a nice move. What are you seeing in the equity markets right now? Not only in the U.S. but globally. I mean, we had everything tanked obviously in April, and now everything's gone straight up. Is it too far too soon, or what are you kind of seeing in the equity markets?
What's really interesting about equity market is the majority of the market, apart from the retail traders, did not participate until VIX dropped onto the 20 handle again. And by that time, it already did 80% of its drop back. So since the CTA started stepping back in, and you can see that via the data and the options market, the surge has actually slowed dramatically because there are more in the accumulation buying range. And again, everything that drove it back up seems to be still there. All the hard data was meant to go sideways. Hasn't really happened. The hard data in the US is still telling you things are a bit slower, but overall everything's going great. So I don't think we're going to see much of a headache unless we see some of the hard data drop off.
Yeah, that makes absolute sense. And let's move to the currency markets a little bit. I know you trade a lot of forex pairs. We offer currency futures, so everything's just against the dollar. But I think what's really interesting that people don't talk about a lot, but you talk about a lot, is the fix and kind of what it does to currencies. So can you kind of explain that for people that probably or that may not have ever traded currencies before, and how kind of traders can take advantage of that?
In terms of the day-to-day basis, at 4 p.m. London time, banks, all British banks, they fix the FX price in between each other. That allows portfolio managers across the world to kind of understand where is the portfolio, what do they need to balance in and out across every currency, all asset classes. But something interesting that happens, the banks and some of the institutions, they build a band of called supply and demand around that time frame. And then for the following day, they use that to kind of as a springboard to express a trend idea or even just accumulate more. On the longer time frames, particularly what we found this year is that into the peak fear of where Canada was getting slapped with higher tariffs, Canadian dollar actually started to jump right back up. So if you look at the futures, you can see the Canadian dollar straight out of the bat. I believe it was around February when it was peak fear. It just totally went the other way, and that's why nobody likes currencies that much because it always tends to do the opposite of what everybody else is expecting. But that's what is market for you. It always does what you not expect. So positioning was at a level which just hasn't been in a near decade, and it reached levels which was just not kind of making any more sense for importers or exporters in the US. And now you're seeing that turnaround, and it's kind of dragging the entire market with it. I'm kind of expecting this to continue, as I see from the COE as well. So you see a weekly data, you see a lot of CTAs, they're kind of taking back from the bearish positions on the Canadian dollar, feeding back into the dollar bearish trend.
So let me ask you about the status of the dollar versus these other currencies. Would you expect that in general, the U.S. dollar is going to continue to depreciate against most of the majors?
I think in the short term, what everybody else is looking at, what is the landscape going to be going out? There's some whisper for us currency traders, central banks is a huge thing. So there are obviously whispers of Jay Powell being replaced in May, which naturally will in his, I believe, tenure ends. And everybody's thinking, well, what is the next central banker going to do? And they're trying to price that in. There is the story today. In a week or 2 weeks from now, that story will then turn into another thing, which very likely is going to be inflation related. As we can see, every single commodity out there is just keep hitting new peaks. And I think that will be the story going forward, where we think that the reaction mechanism of all the central banks is going to be more towards how can we protect against this? How can we still make our bond market attractive enough so people buy our bonds and then going forward with that? For me, in terms of what's happening with the dollar, it seems to be maybe a tug of war between a couple of countries. If I have to be a bit more selective, I believe the Canadian dollar can be strong against USD. USD Euro will have a bit of a drop back, but initially, and then further out, I think more towards Q4, we should see a bit more downside on the USD.
I agree with that. I like that. We'll see. We'll see how it goes as we go forward here. I love the currency pairs. I love the forex currency pairs for sure. Um, Speaking of inflation, though, I'm going to probably interrupt you in a minute because we're going to go to some economic data in a second. But what's the inflationary picture in the UK versus the UK and in the Eurozone versus the US?
They are fundamentally changing. In the past, there was always very similar, like the boom and bust of PMIs, commodity demand, that sort of a thing. With new administration, the US totally threw a spanner into this. It's all changing. Where US is kind of dropped 10%, that means imports for other countries are no higher. That means Europe, which is an export-driven economy, is now needing to either lower their prices or even buy sometimes at higher prices because some of the other currencies which are they're buying the commodities from are increasing as well. That's all feeding into the margins, and it's not a pretty picture, particularly with a lot of the UK companies I see here. They're needing to do a lot of thinking about how can they produce still at quality, but still making sure people are actually going to buy it.
Makes total sense. We might have some breaking news here in a couple of seconds. And Shai, let me know if you see the data that's hitting the streets. I'm going to pull up just even the S&P. I'll be looking at that to see if there's any reaction. Particularly the retail sales, I think, is the
Is what everybody's watching. Yeah, retail sales and import price index to see if we see kind of a pass through of the tariffs at all. So, so far, we need about 20 more seconds. This should come in, but retail sales are expected at minus 0.6%, and import price index is supposed to come in at minus 0.2%. We will see in just a few minutes here.
There we go. We got a little reaction
and here we
here.
go. So we got retail sales minus 0.9% month over month. We've got import price index 0.0%. Month over month, year over year was 0.2%. Export price index was minus 0.9% month over month, and export price index year over year was 1.7%. So retail sales are definitely softening, and that's a little bit bearish for the markets. And import price index was flat, and it was not really important to the market. It was 0.1% prior, and it's 0.0%. So we're not really seeing a pass through in inflation yet, but we are seeing softening in retail sales.
Yeah, I mean, a little bit of sell-off in the even the S&P, not, just a couple of handles. We're trying to break through that session VWAP right now, so we'll keep our eye on it. But back to you, Mayed. We get these we used to live and die on this economic data as day traders, and we still do to some extent, but it just seems like there's just so much uncertainty with respect to a bunch of different policies and tensions in the Middle East and other things like that, that it just completely overshadows the data. What's your interpretation of that?
I think there's a timeline with everything, with every theme in the market, Jim. You sometimes see that, for instance, a conflict will have a peak and trough in terms of how much market cares about it, and that will eventually feed through as well. Where the data is going to be in the back of every policymaker mind. So that eventually the data will always become more important than the things that are going on. Because geopolitical conflict, if it doesn't become more regional and it's just between sort of those areas, it's not going to make a difference to the amount of Netflix subscribers in the end. And so those markets were going to be a bit more independent in terms of what they can produce and how they're going to motivate the buyers or the sellers on the line. We've seen the retail sales data coming a bit lower today. I think is a bit more feeding into the narrative that everybody was expecting things to slow down for the summer. And that kind of makes everybody think, do we want to sell here? Do we maybe want to buy a bit more protection? Are we maybe even going to entertain buying bonds here? Because bonds have been unloved for a long time.
Absolutely. And one last question I want to go, because you mentioned, we have geopolitical risk right now. So what are your thoughts on the crude oil market? And I know there's been a lot of talk about, Iran will close the strait. So kind of give us your kind of scenario on that whole, the whole conflict that's kind of going on right now, and what we may or may not see Iran do with the strait.
Yeah, but obviously it's not good on either side to see it. It's quite sad. In terms of closing the strait, to me it's more a newsworthy article, but a bit more realistic. The strait area's narrowest point is about 54 kilometers, 30 miles in old money. That's a lot to try to close down by any means. I mean, what sort of a structure can you put in place to put this down? Maybe you can try to rocket barrages, whatnot. The other issue Iran has got, it's not only it's going to pull the US into the conflict if they do that, but the other side, China, is dependent to a great degree on that oil supply as well. On top of that, Iran has got tankers out that are kind of getting through that strait themselves. So it doesn't seem to me a viable option at all at this stage. If for whatever reason it does happen, or maybe the 30% of export that comes from that region gets halted, I believe oil can easily trade with a 120, 150 handle. But it's a remote possibility in my opinion.
I'm gonna fill up the gas tank today, just in case. Unbelievable. Well, we appreciate you being here with us. I put your Twitter handle, X handle. Sorry, I'm never going to get over that. I put your
Same.
X handle into the chat, folks. Give Maya a follow. Great stuff, man. I'm really glad we met you and looking forward to speaking with you again.
Thanks, Jim. Thanks, Tracy. See you soon.
All right, all right. Um, Love that guy. He's now we asked him questions on like
He's a great
different
guy
asset classes and he nailed. Yeah,
and everything. I know.
I could talk to him all
He's
day.
great.
Yeah, fantastic. All right, well, it sounds good. It's about that time that we get the man, the myth, the legend in here, and I appreciate talking to you as usual, Tracy. Great seeing you this morning.
All right. Great seeing you. I'll be in the chat.
All right, all right. Let's get Pharm is in the house. Pharm, how are you?
I'm doing well, Jimmy. How about yourself?
Pretty good. Is that a Diamondbacks baseball cap?
It is. I figured with Deli off, I could get away with wearing a baseball cap for a day.
Oh, even with them, you could do it. It's funny because their logo, the Diamondback is a snake, right? But if you go to a game, they have like a cougar or a bobcat running around as their mascot.
Right. Right. Makes sense, right? Absolutely. We have a lot of them around here. Baxter the Bobcat or something. Yeah. Makes sense.
Yeah. Well, I guess you can't the mascots uniforms don't come in snake sizes.
Yeah. I guess they didn't want a snake run around the crowd scaring kids or something like that. But weird
Oh.
team.
Anyway, I love it. I love it. I've been to a game actually, not too long ago. A couple of years ago, I was in Phoenix, went to a night game. It was wonderful. It's a great stadium.
Yeah, it's really nice. It was nice to finally get a team out here when I was a kid growing up, and the fact that they actually won somewhat quickly was kind of nice in 2001. So glad
Yeah.
to have them.
Well, when overnight, what are you seeing overnight? I mean, we're giving some stuff back a little bit, but maybe not. This is just so resilient, this market.
It is, and you could probably speak to that a little bit better than me. I just call it, gamma banana vana kind of stuff into options expiration. Makes sense that
Yeah.
dips are supported. And that's not really the only reason. For some time we had sort of under positioning in a lot of places, and so these dips do get supported. I think a lot of this is positioning though into option expiration. And so like we'll see if it loosens up afterwards, but it kind of feels like the market wants to sell at times and it just can't. And so sometimes that can change and you get a little bit of a change in character outside of OPEX. So I'm definitely interesting to see what that does and if we get some ranges open up afterwards, even if it's not downside. But I'll start looking today for some of the things that I look for as we get a little bit pinned into these option expirations. So going to be an interesting day, I think, today. Potentially important. I've marked out, for myself, and I'll have you run through your charts first, but this week's open, yesterday's cash open, whether or not sellers are going to be willing to offer that or not at any point in time this week. I think it's going to be a important week to have that marked on your chart. So I did add that and wanted to throw that out. So
Yeah, well, let's go ahead and pivot over to your charts. We've already been looking at mine this morning a little bit, so let's get a refreshed view of these markets right now with the Pharm charts.
we can do that. When you've got me.
Here
There we go. So, the biggest thing here is that we came up here and we established volume. And the first thing that I want to point out is that, whether you back adjust or not, it's important to know that like this was actually just still within range, really. Like if you look at an SPX cash or if you just look at ESM, like this is just in range, top of range. So 61, we came up into this 6105 to 6113. That was just absolutely massive. We traded into that range into December FOMC and the January FOMC. And here we are sitting there testing it again into an FOMC. So it's a very important spot. But if you subtract out the 52 handles, you get back to 60 50s, right? And so effective range on M was, roughly 6,000 to 6050s. And so now here we are, and, basically that same range on you being represented as basically 6050 to 6100 if you want to make it, a little bit easier on yourself. And so, until there's a clean break away from this range, I'm going to consider it, range, basing, consolidation, chop, whatever you want to call it. And, from here within this week, given, the volume so far yesterday was established basically 82, 60, 82 upwards to, 6106s anyways, for sellers to, kind of maintain any kind of upper hand, they're going to need to defend that today. So, if we get pops into, you take this lower high here from last night, like 77, basically, if you see pops defended between, 77, 82, and then, drive away from there, then like, I don't know, maybe it gets interesting out of option expiration. But generally, you're right. I mean, dips are just getting bought. Price is constructive until there's significant amounts of supply trapped overhead. It's not going anywhere to the downside. And for me, I'm just favoring dips. And so that's kind of the big picture where I'm at, coming into this week. And then, this week, how could it change? That's always important, right? If you're in dip buying mode for like weeks, then you want to know, what could happen to change that and make you pivot your stance. And to me, that's what we would need to see. Leave all this volume up here trapped, drive away from that volume. We're going to need to cleanly offer these 60/50s, drive away from that as well. So we've got a ways to go before anything meaningfully changes. And, maybe we just kind of stay up here pinned until options expiration. Maybe we see a move, with FOMC. But that's where we're at now. And then, of course, I'm always monitoring for potential for hedging flows to come in, the day before a known catalyst. I mean, like, who knows what headlines are coming out? I mean, there was first there was ships on fire, last night in the Strait, and I guess they were, and then there was some talk that maybe they collided and it wasn't anything nefarious. That seems kind of coincidental, but there's just a lot of stuff going on, and so it probably makes sense to have some hedges on into FMC. Though I think pretty much everybody knows exactly what's coming with FOMC. It's not a huge surprise necessarily, but maybe we see some widening of range today. I'm this is hopium on it from a day trader, just widen range a little bit, and I'll be happy, because this 82 to 105 chop wasn't super thrilling yesterday.
Yeah, no, I hear you. Wednesday is going to, and we'll talk about it tomorrow, but Wednesday is going to be, everyone's going to look at that SEP, that summary economic projections that you get every other meeting, to see, where did the dot plot shift to? Did it shift at all? Did it shift up, shift down for, all the different categories that they do dot plots for? So, and then, are they going to do more tapering, less tapering? What's going to go on with that? Quantitative tightening is really the only other thing, right?
Yeah, and I mean, you're right. That might be the most important takeaway from this meeting, if there's any commentary there, because I mean, even the SEP might be in wait and see mode. You know what I mean? Why change the SEP at this point? If you don't know what the heck's going on and you're waiting to see what data does, and why update the SEP a whole lot? So yeah, I think maybe if it's anything, it's asset management, balance sheet management that matters tomorrow. But I mean, regardless, we'll have that short-term volatility crush that'll likely drive prices higher, depending on where we're at, coming into that meeting and presser. But it's hard to imagine too much of a surprise. And then from there, we all talk about what color tie Jay Powell's wearing, and what his tone comes across as. And I could see it coming across as a somewhat dovish tone. That would make sense to me here. I mean, I don't know. But, some of the data has been coming back okay. And also, geopolitical tensions are rising. Why come out and try to talk this thing down necessarily? Don't rock the boat. So we'll see what happens. But I just don't see it as a super meaningful catalyst. And now that I said that, we'll probably be down 6% or something like that, because he wears an orange tie or something like that. So.
Oh my God. No, well, I could fix that. I'll just buy some puts, and then, that won't work for me. So
Downside is over. Absolutely. Yeah, no, I'm with you. I mean, I never bought IWM calls, which is why we've continued to go higher. So I apologize, Bears. I just didn't get around to that with the wife being out of town. So once I do that, it's game over. And you can buy puts and they'll pay.
Oh,
So
you
I'm
can't
with
blame
you.
you can't blame Mrs. Farm for that. You can't do it.
Yeah, we all have our fades. Like just some things we do that just never work. And for me, it's the IWM call. So. But I mean, that's where we're at big picture. I mean, the biggest key into today is going to be 82 to me. And if you drill into the five, just sort of recap a little bit from yesterday, like I like that I have that as a composite with the overnight. I usually separate my overnight profile from my RTH on some of my own charts, but I like the fact that Ninja combines them because I mean, if you look at this thing, you just got stick. Stick all the way up. That's a P-shaped profile. And so what we did overnight was break down that P, right? So we lost the P off of the P, and then we broke some of that down. And so, to me, the first target was yesterday's cash open. So like on a cash hours basis, you had, the same profile basically, right? And then, you could widen that out to the overnight profile as well from last night. And so we, in my book, we completed the sequence from a cash hours basis. And that's part of why I'm watching yesterday's open to see if that ends up being offered. Because, if we remain capped below yesterday's open, then this opening drive is trapped as well, which, clearly looks to me like it was a lot of covering or at least forced buying again. And it does open the potential of retracing this entire move, right? And we do have a contract gap, so they do tend to get filled outside of that pesky one and the 4600s, what have you, that's been driving bears nuts for quite some time. But it would make some sense to come down and fill that at least to Friday's high, which was 60.29 3/4 on an ES continuous or ESM. And so like if you're still in ESM mode, that's kind of right in those 59.80s spot, right? We talked 59.87.5. So somewhat analogous to that. So it wouldn't be catastrophic even if like we came down and we did that today and then just kind of like popped back up. But what's going to matter to me, regardless of what happens today, is do we end up leaving this volume trapped up here from yesterday? And that gets just a little bit interesting to me because again, like the 6105, 6113 spot, just absolutely massive. And we've seen huge moves. Like just put it on your chart on a non-back adjusted chart and put on like the 30-minute or like the 4-hour or something like that. And I mean, it's just touch after touch after touch from both sides, hugely relevant spot. And so, to me, that's basically opening. I mean, we're close enough to all-time highs, right? Anyways, but I mean, to me, that's it. Like above there, then just send it. Let's make a new high, make it a nice clean cash hours high before we head to the 1929 lows. And then if this remains capped, then like, I don't know, maybe sellers can come up with something out of OPEX and at least keep it interesting. And, maybe then we'll have a whole bunch of people yelling, quadruple top or whatever that we came up to these 6100s and failed again. So
yeah,
nothing doing for now though.
Yeah, I mean, I still have one eye on the June contract. Right now the June contract, it's about a 52, 53 handle separation between September and June. June right now is trading at 60.09. And, we were talking, I don't know how many days in a row, that 6,000 level, it was the gift that kept on giving. I mean, it just kept showing up, kept showing up, kept showing up. I'm not so sure it's, if you do the math and, you add the 52, add the 52 handle to it, that's where we end up going into Wednesday before the announcement.
Yeah, I mean, I think it makes sense. And of course, there would be, the 6,000 strike on SPX would be there as well. So, I mean, that can make some sense. And that's basically your 60/50s here. And so that's why, to me, if we're cleanly offering these 60/50s and driving down away from it, then we start to talk about having some inventory trapped. Because if you were a 6,000 long, on June and rolled to September, then you're effective 60/50, right? So you're potentially a little bit underwater there. So I do think these 60/50s are critical. Obviously, we saw a couple of dips below overnight, and put in a poor low. I don't pay as much attention to overnight poor lows, but they're effectively identical. They're a tick apart, so it's not really the best low, and so that puts me on watch for like some kind of sweep of these. It doesn't necessarily mean that I'm like slamming short to target those because I'm a purist. I'm like, we have to clean up every poor low or poor high before we can move on with business. But it wouldn't surprise me at all to come in here and sweep these out. And something we've talked about since, I mean, really February, whenever we started the show, I think March, I guess it was.
Yeah.
Again, like come in, drive through the overnight low, drive through the prior day low. Obviously, we would be on opening on a true gap down, right? Yesterday's cash hours low is basically right here up in these 66s, but then take out an overnight low, and then like it gets kind of interesting, right? And then maybe something has changed, or it's just hedging flows. So remember your rules on a true gap down for today. So any kind of a true gap, which just means that you're opening completely outside the range of the prior day on a cash hours basis. And so again, you've got yesterday's low. And if we open below there, then we're monitoring, the opening drive to me. Do we drive away from that to the downside immediately? Then that tends to look a little bit bearish, and maybe you need to be a little bit hands off on the buy button, at least until we see the counter move. Let's talk about like what's the first move and then what's the counter move, right? And which one looks a little bit stronger to me. Because again, bulls are going to keep buying the dip. They're not in any trouble here just yet. And so, what's that first move look like? On the flip side, if instead of driving lower and away from the open, we simply can't bid and we can't offer below the open, you just open and then just drive straight higher. And like, who knows where we're going to open, right? We've got 40 minutes. I mean, it could be 60-40. It could be, we could end up opening at 60-80. We don't know. But if we do open below yesterday's cash hours low, and, the opening range low is like, the first 30 seconds, basically the open is the low, and we just drive higher, then you're looking for a retest of yesterday's low, yesterday's open on a cash hours basis. Again, that's kind of partly why I've marked out this 67.25 here as yesterday's open being key to see if, all this volume remains trapped. And I mean, we haven't seen enough from sellers for me to be optimistic that they're actually going to accomplish that. So I think the best case in terms of like opening up range would be to open on the true gap down and go, fill the RTH gap, like at least come down to Friday's high, 60.29 3/4, maybe even come down and backfill this entire overnight structure from Sunday down into this, 599 to 6003, which again is like basically the same spot that we were dealing with on June, but now we have it on, September acting relevant as well. Like maybe we even come down there and find our feet. Like, again, not calling for it, but like that actually opens up range potentially, because I still think it's probably two-way trading, but it starts to look a little bit tenuous if we lose like this 6,000 spot. Because again, that's going to be 59.50s on ESM. It's going to be 59.50s on SPX. And you start talking about having some inventory trapped overhead. And, again, do we just magnet back to SPX 6,000, ES 60.50s now? Or do we sustain any kind of break away? But regardless, I'm a day trader, so I prefer having some solid range. And so that's what I want to see because, again, it opens up range either from a long side or a short side, but it doesn't necessarily mean that we get it. But very much monitor where we open relative to yesterday's cash hours low, and then what that first 5 minutes kind of does. That's what I'm looking at. I like the 5-minute opening range. Some people look at like 30-second and they're making decisions. I don't trade the open a whole lot, so I don't have a reason to like use the 30-second, I suppose. So I like to keep it a little bit slower, wait for that first move, that first counter move. And I don't take a traded open unless there's like really something juicy setting up, because I'm kind of a setup and a field trader. So I don't just kind of like slap something impulsively generally.
Yeah. Yeah, I mean, this is a positive gamma environment for the equities right now still. And, that GX1 level is for the futures actually on the September contract is exactly 60.50. And then on the downside, we use this Mentor Q data also, and it calculates this 1 day max and this 1 day min level. I don't know what their secret sauce is, but I've been following it and tracking it for a long period of time, and it gives some pretty good targets. And their one-day min is at 60.35. And then we have a high vol level at 60.20. So we have these areas that we have to fight our way through to get less than, get all the way below that 60 handle.
Yeah, and 60/20, that would be roughly, I suppose, Friday's cash hour low if you adjust for contract roll. That was 65 and a 59.65 and a quarter, I believe, on ESM. So I had 50 to that. If I just did my napkin math right, which is entirely possible that I did not because I'm a bit tired. So, looking at your five, we've planted VPOC in this 60s range, the 60.62 to 60.66, which I'm not surprised by at all. Generally, one of my weekly levels each week is going to fill in with volume and be a horrible location to trade. It'll be reactive as hell for, 2-3 touches or what have you. And then it just fills in volume. There's a reason for that. So that's no surprise. It looks like the 60/60s might be it for this week. So maybe we build out some additional volume here today. But it's a nice clean profile here. So rotational trading, maybe 60/50, like up into these 60/70s. I do find it interesting. So this 60.74 3/4, that was the CPI high, I think, from last week. So that was the pre-market high from last week. And I find it interesting that, like, even with a contract roll, so adding in your 52.5 or whatever handles of premium, it's still acting relevant, and we're still having a hard time finding bids above there. So perhaps like a subtle clue that maybe we're rejecting higher prices. But again, sellers have done precisely nothing for quite some time. So until we see a sustained establishment of value and volume and time, lower and lower, nothing's doing. But I'm very much on watch for that because, like, again, that 61.05 to 61.13 range is just absolutely massive. I said in the room yesterday, like, I am just not messing with that spot. I did, add back some longer dated puts up there because, like, we swing longs on individual names, things of that sort. So I at least want to have some kind of protection in a blended book, and have some kind of hedge on. Sometimes it's more than a hedge, but that's definitely not a spot that I'm looking to mess with. And I would like to see if we can drive this lower today and at least get that gap filled down in the 60/30s. I would like to see that.
All right. All right. By the way, a faded firmament in the chat's trying to figure out, since we both have blue shirts on, what does that mean for market direction?
2A, neutral. Yeah.
There you
Yeah,
go.
I see. I channeled blood last week. If you remember, I wore my blood shirt. I didn't mention it. I didn't want to jinx in it. It was either that day or the next day. We had like the great bear market of Thursday or whatever it was. I don't remember if I wore blood the day before or the day of, but like the sell started basically that day. And today I'm relatively neutral. I mean, into FOMC, I'm going to remain that way. So I made sure to pick out a color because I knew that people were going to be speculating on that. Green was staring me in the face, and I was just like, oh, no, I'm not gonna work green. That's gross. So I would like to see us loosen things up just a little bit, and it does not have to be a bearish call at all. It just opens up ranges because, if you were trying to trade that rotation between, roughly 85 yesterday and 6,100, like, oh boy, that's fun, right? I hate trading a P while it's within a P. I'm always, if I'm trading it, I'm trying to front run a breakdown of a P, and the same thing with a B. I'm always trying to, if I'm taking a trade at all, I'm just, unless it's a really big B, with a wide range, like I'm not really into those rotations within those types of profiles. I prefer it, to take rotational trades on a pure balance day.
So a P within a P, that would mean that the action is clustered together at one smaller range.
Yeah, so I mean the trades in here, and like you can see it, it wasn't as clean, but generally, within any kind of, because this is a D, right? It just happens to have a stick on it, so it makes the P. And so with any distribution, with any D or with any range, you can take two-way trading back and forth, and that's fine. It's just with the low range, I'm just not super interested in doing that, and so if I suspect, and again, a P is indicative of forced buying for sure, usually said to be short covering. If there's no upside break, then we're going to continue to put pressure on that. And because the volume is then below and the structure is poor, if there's no upside break, then can't go up, you got to go down, right? And so that can retrace generally pretty quickly and pretty easily. So that's the big trade off of a P. But you can absolutely trade this both ways while you're sitting kind of within that P profile. So
Yeah. Yep. Makes total sense. All right, man. Well, I appreciate you for sure. Great conversation this morning, as usual, and looking forward to talking to you again tomorrow morning. In the meantime, have a profitable day and get some rest if you're tired.
yes, sir. We'll see you. You take care, buddy.
All right. Thanks, Pharm. All right. We are with Tanya Trades, New York Yankees, purple background today. How you doing?
I'm doing great, Jim. How are you doing?
I'm doing good. Yesterday I was a little off my game for some reason. I don't know why, but today I feel this renewed energy today, and I'm waiting for these markets to start, waking up to my energy.
Honestly, same. I was a little bit early on my shorts yesterday, but like pretty much after I left and Nasdaq took that new high of day, ES didn't, and then it had this huge like drop down. That was pretty interesting, pretty good for a short there. I wonder if did anybody in the chat catch shorts in the afternoon yesterday or even during Asia? It was kind of wild, honestly. Let's see here. What was it yesterday? Yeah, I gotta go in like a 5 minutes to see cleaner here. Yeah, it was kind of sloppy-ish, but it was kind of funny, honestly, how it decided to take out that high of day again after 11, and then we had that drop here. And yeah, it did come into this the bare minimum I wanted, which was like a previous hourly low for Nasdaq. It stopped right before it, actually, you guys, and then ES took it, and then it set up again during the afternoon, took out a previous hourly high, and then came to the low, but then not much movement until Asia just like completely took out that 9:30 open. So expansion during Asia, not my total favorite to be trading, especially we have FOMC now coming up. So we took that 9:30 low from yesterday, and we've just kind of been ranging so far. I think YM looks a lot more, retraced a lot more actually than either of the indices, which I'll pull up actually just side by side for a second. Let's take a look at the dirty 30.
Now, we talked about the YM yesterday. I like the YM. It's the mini Dow. It's been around since the early 2000s. It's a nice contract to trade. A little light sometimes, so you got to be careful on your entries.
That's true. Yeah, that is true. Yeah, you have to be careful on your fills. I've noticed that. Like you don't really want to market order there. You'll get filled at the absolute bottom there. So it's a little thin. So YM is almost down there. I mean, it actually came all the way back into that like 6 p.m. area. Oh, okay. But we didn't get back to 6 p.m. open. So I would think that we could even come back to 6 p.m. open for YM. I'm like you guys, I'm a little bit, I got to stick with my bearish bias still. I mean, I was just a little bit early yesterday, and that's fine. I hope some people did catch some shorts. I think that today, kind of just going to stick with that. Going to look at whether we take out maybe a previous hourly or 4-hour high on NASDAQ or ES. Maybe there's some kind of divergence. Maybe NASDAQ takes out this high within here from London session. And then I'll kind of just evaluate from there. I don't want to be rushing too much. Don't want to overtrade this market today because we have FOMC coming up. But yeah, what do we have? Do we have any more high impact news today, actually?
I almost feel like these days it doesn't matter what the news is because we're going to get some statements out of Capitol Hill which are going to which is going to just take primacy over anything. So But yeah, we had retail sales this morning, industrial production at 9:15 is a red, I guess you'd call it a red folder
Okay.
event, so in about 10 minutes. But after that, I don't really see anything on the horizon to worry about.
Okay, we have some announcements, but they're not very high impact. Yeah, for me where I'm looking on my calendar, those are more like a yellow folder news, not too much, not expecting too much volatility from that, but something to keep in mind. Yeah, there's some 9:15 and 10 a.m. news. Okay. Um, so yeah, it was a little bit earlier on the shorts yesterday. I think that today we could still, yeah, I think it's a two-way tape. I think I can find shorts today. I'm honestly just gonna be focused on looking for shorts so I don't try to flip-flop and just make sure that I'm focused in that direction unless there's something so overwhelmingly bullish like we take out, like we close above 139, 137 on NASDAQ in the next hour. I want to look at actually on the hourly. I think that we could retrace even to, yeah, that's Sunday. It was interesting that open was all the way down here. And we just searched from there. I think we could do that on ES or NASDAQ. And I think that ES, yeah, I think that we could get back down to 21,956 for NASDAQ, even down to 280, yeah, 21,877 if we have continued price action to the downside. But that being said, yeah, I'm gonna watch out. Maybe, I mean, hopefully they'll see some kind of divergence from a previous hourly high on ES or NASDAQ. I'll see how we open. I see that the previous hour did take out this 8 a.m. So we could just kind of just start dropping there at the open. I wouldn't be too surprised. We have some pretty, we'll be making slightly lower lows and lower highs there. Let's see.
Yeah, but it's I'm looking at the NASDAQ's the session volume profile, and it's starting to become like picture perfect. It's like textbook. Like if I write a book on this, I'm gonna use this chart. It's
Really?
really, yeah, it's really Gaussian, really nice distribution. Point of control, I guess, isn't as firm as it should be yet.
Mm-hmm.
But it's way early right now. So yeah, I almost get the sense of will there be an impending breakout? Right? It's like this
Mm-hmm.
coiling ready to go. There's the potential energy is growing. Um, I don't know though. And then alternatively, it could be like, all right, whatever. We're gonna wait for the Fed. We don't care what anyone says.
Yeah, that's true. That's why, I mean, honestly, on Mondays and Tuesdays before FOMC, I like to be done a little bit earlier in the day, especially Tuesday. So tomorrow we have more red folder news at 8:30 unemployment claims, and then yeah, the FOMC federal funds rate announcement at 2 p.m. And then we're gonna have a shorter week this week where Thursday's a bank holiday, so there'll be less market participation on Thursday, that's for sure. So I think it's gonna be like a two-way tape. I'll be mostly looking for shorts, just because I don't want to be flip-flopping too much. And I think, yeah, I've been pretty bullish up until a couple of days ago. It's just let me think. Yeah, even on Friday, I worked out the shorts, and and on Friday you could have found long. So it's definitely been like a two-way tape. Even same thing for, well, yesterday in the morning was definitely only longs. The afternoon provided some shorts down to here. Asia dropped down. I don't love that when the expansion happens, like I said a little earlier.
Yeah.
So I kind of want to see if, let me see if the Dow actually has any sort of divergence here with this 3 a.m. London high. Um, no, we didn't take that out either on the Dow. It's kind of remarkable how, yeah, the Dow is definitely a lot weaker than ES or the NASDAQ. Like from yesterday, just steadily dropped lower, took out that 930 low even before any of ES or NASDAQ did. And we're all the way back down close to its Sunday open, honestly. So we'll see here. I'm gonna basically be watching if, yeah, let's see here at 7:15. That's somewhat interesting. So maybe we could have a slight push back up today in the morning. I really want to see what what the open is like, honestly. I think that'll tell, like you've said, it'll tell the tale. If we just kind of start surging up higher above these highs and we continue, then I'll look for yesterday's high.
Yeah.
Here you have NASDAQ took this low, did not take this low, but the Dow did. So it could be a potential start. I mean, I'm going to see if on the 15, do we respect this 15-minute gap? Then we could potentially push, higher towards those pre-market highs, and even yesterday's high. But that being said, I want to be more bearish today, honestly.
Yeah.
Just with
No,
yesterday's close too.
so I think that's so
Very
important. I
patient.
mean, so you've established your bias, right? And your bias is bearish today. So you're going to be adjusting your strategy because in that manner, because that's what your bias is. And Merritt might be bullish. Who knows? And not to suggest both of you could still have winning trades. That's the beauty of the futures markets here, by the way. But by setting your bias in a certain direction, at least for me, it's like, all right, I set my bias. I'm looking to get short on these pops. It prevents me from flip-flopping and
Yeah.
chasing and going in opposite directions, and it's just a lesson in frustration for me when I do that. So I think that's a great way to start the whole thing off.
Yeah, exactly. Like, yeah, you could, sometimes I will flip bias if it truly shows me to a lot, like I'm wrong. But oftentimes it just requires maybe some more patience. Maybe you're a little early on the short. Maybe you're too early on the long, especially in like a two-way market. So, yeah, let's see. Because I'm mostly like bearish because I think that honestly, we could retrace more deeply into this uh, whole leg up. This whole leg up, we just took it, the entire swing leg down back, and we're in like a consolidation market. So I would think that we're going to retrace to at least 50% of this leg. So it's like sort of a mean reversion type trade. So I think at least we'd get to 21,960s as my first potential target. It's like just a fair value gap below 50% here on the 4-hour. And then for ES, let's see here. Oh yeah, ES I think also took out this low. So honestly, yeah, if the bulls are, if most people are probably bullish also in the chat, right? We always like take a little poll. Honestly, it's most of the time bullish, I think, 50 something percent. This is a potential like showing that a change in character here with the NASDAQ taking out this low. And ES also took out this low, but YM did not. So you have a 15-minute push up, you have this 15-minute FEG. So for me, it's kind of important. Is this going to hold up or not?
Yeah.
This area. And then if it does, then, we can take out these pre-market highs next. Because then everything else is kind of repriced too. If we kind of just surge through this to the downside, I'd look how we respond to this low. Look for continuations lower.
Yeah.
Yeah.
So we're at the poll today: bullish 38%, bearish 33%, neutral 29%. So pretty even.
Oh wow, it's like it's the most even it's been in a while, actually.
Yeah.
I guess like the Asia push down has maybe changed some people's influenced some people's bias. Honestly though, like that's interesting. Yeah, here at I think this is kind of interesting here. And NASDAQ took out this high from here. Huh.
Am I reading the chat right? If I'm reading the chat right, Anthony is drinking beer in a pub with Kane.
Shout out to Kane and Anthony, honestly. Shout out.
Oh my God.
Pour one out for me. Oh
Anthony,
man.
next time you need a personal assistant to travel with you to London to hang out with Kane, I want to throw my resume in the ring right there for that.
Yeah, is Kane wearing a Yankees hat? He typically is.
I don't know.
Let me know. Oh man, okay, that's cool. Yeah, where's the invite?
Oh my
You guys
goodness.
have to come to New York next.
Yes, for sure. I
Yeah,
love
so
that. Yeah.
so those are my levels. I think that, if Nasdaq holds 2240s, then we could get to 22 120s at the open. And if it kind of drops from there, I would look for 21 960s for Nasdaq, and for ES, I would think that, yeah, 60 50 57s 55s should hold. If it doesn't, then we could drop down to 6037.5. I would look for, and these are some equal lows down here. I would think that we'd get to next.
Okay. All right. All right. Well, it's about that time to trade the open. I am going to be popping over into the chat, and I will be paying attention, taking notes, and wishing you the best of luck.
All right, great. Good luck and good trading today, everybody.
Right. All right. Up next, trading the open, we have the spectacular Merritt Black joining us to trade live. Let's get Merritt in here. Good morning.
Good morning, Jim.
How you doing,
How
man?
are you?
I got to say, every time I see most men cannot pull off the mustache the way you do. It's just spectacular.
Thank you.
Oh man. So how's everything going? I mean, what do you, I mean, how are you kind of thinking about FOMC week with probably no rate adjustment, just a lot of talk, and then all the fires that are going on in the world?
You know, I got to a point of I'll call it frustration, not really frustration, but I just see so many people trying to get into trading who are so caught up in, they're trying to like trade a 5 minute NQ chart or a 1 minute NQ chart technically and whatnot, and they're getting caught up in all these geopolitical things and all this uncertainty and all these things and what's the Fed going to do and inflation and tariffs and everything. And look, if you're gonna incorporate fundamentals and learn about that, that's fantastic. But it needs to be in a structured way where you actually feel like you have some edge there and you develop a view or a bias, as you and Tanya were talking about. But I just see too many people kind of getting lost with a lot of this, not just the fundamental stuff, but just everything. They're inundated with so much. And so for me, when you start asking me about the Fed or what's going on in the Middle East or all these things, to me, it's just an absolute non-factor. I have no idea what the probabilities of a rate cut are, if we're about to go up or down or neutral or nothing. And I just encourage people to get to that place. Of course, it takes experimentation to get there, but you want to get to a place where you have your variables, and that's what's important to you, and everything else is noise. It can be intellectual, it can be fun, it can be stimulating, but when it comes time to trade and manage trades, you got to develop your style and your niche and your variables that matter. So anyways, rant
Yeah.
over. I'll shut up.
No. I love that, and I'll tell you why I love that. I have history here. One of my mentors, a fellow by the name of Dan Gramza. Dan, he's been around a very long time, and from a technical analysis point of view and a trading point of view, he's one of the best that I've ever encountered. And so he taught me how to interpret Japanese candlesticks in a way that we take for granted. And he was so good at it that it became clear to me as I was kind of learning how to read a candle that what you're saying is absolutely true. All that stuff's noise. It's the buyers and sellers are telling us what's where this price is the only thing that matters, right? And the buyers
Yep.
and sellers are telling us this, but you could look at it in the candle and find that out. So I love that. I love that. I love that that kind of philosophy behind it. Anyway, well, listen, thanks for being here with us as usual. It's great talking to you. Great seeing you.
You too, man.
You look
Welcome
for,
back. We missed
yeah,
you
no.
last week.
Oh, thank you. Thank you. I missed being here, by the way, more than anything. I was like, man, I want to get back. So anyway, I'm here. I'm here to stay.
Love it.
All right, man. Well, listen, good luck today. I'll be in the chat. I'll be taking notes, and good luck.
Thanks, brother.
All right.
Good morning, chat. I have actually found myself enjoying doing this weekly stream as well. To be honest, when Crudele proposed it to me, I thought, well, it could be a good way to introduce Apteros to a new audience. I would be happy to do it as a friend for Crudele, things like that. But taking my time to do this, not to blow smoke up my own rear end here, but it's a little bit costly, right? I'm not getting to do my usual stuff, and focus on my own trading and my desk. So, but I was talking with someone yesterday. I've just enjoyed this. I really have, and a lot of it has to do with you guys in the chat, engaging, asking great questions, pushing me to be better than I was before. So, yeah, it's been cool. It's been fun. If y'all appreciate what we do here, smash that like button. There's that little thumbs up. Click it. That lets us know you appreciate what we're doing here. So good morning and welcome. So I'm in a position here. I am a little bullish to gold this morning. I think that we could certainly push up to new highs if we go to kind of this longer term 30-minute chart over here on the top right. We kind of have this low volume node zone, which is around the VWAP for the week. We have kind of this swing high, this swing high, this swing high that we could kind of run some stops through to get into that area. That is kind of the upper distribution from the profile from yesterday. So it makes sense that if we're going to kind of hold this lower standard deviation for the week, that we could push up into this area and then possibly traverse all the way to the upper standard deviation for the week. So that's kind of the framework I'm looking at. There is a little bit of additional higher time frame context there. The daily bar chart I have on another monitor, it looks a bit more toppy. It doesn't look typically if I'm feeling really confident and comfortable buying, it's in a sequence like the weekly chart here is, where there's been a pullback and it's just starting to turn and I'm getting risk on, right? That means kind of theoretically my risk versus potential reward is really skewed in my favor. The daily bar chart doesn't look like that. It's gone up. It's put in a big kind of tweezer top, if you will, to use some candlestick patterns for Jim there. And it's just beginning some downside momentum on that time frame. We can't trade all time frames. We can't trade all time frames, right? So there's almost always, when I put a trade on and I'm keeping up with 5 higher time frame charts, higher time frames, I'm keeping up with long-term VWAP stuff, market profile, volume profile stuff. I am looking at where we are with a couple different intraday charts and tools. Not many trades have everything that looks perfect, and that's important. I always tell NADRO students, and if throughout the stream, if you're interested in NADRO or what our prop desk or what we're doing, apterostrading.com, APTEROS trading.com. In order to have a good trade, you want to have a main narrative and a supporting cast. A main narrative and a supporting cast, and those should both come from our higher time frame charts. And so I have that with the combination of the quarterly and the weekly long-term VWAPs. And we do have a nice structural reference, kind of a decent line in the sand at 3407. So I'm kind of long a very atypical style. I actually got chopped up a bit trying to get long before the stream a little bit here. A lot of herky-jerky back and forth, pretty ugly on like a 3-minute chart or something, just nasty. And so I've actually taken the breakout trade here, which is, again, very atypical for me. But I like where we're at on this weekly. So I'm a little compromised in terms of intraday trade location, but feeling good about the trade ideal at all. Correct. We don't like herky jerky. Devyanshu is saying last week you used the terms held bid, held offer, and refreshes. What are they? Not very important. Hardly something that I would ever pay attention to, really. Held bids and held offers are simply that, what the language says it is, a persistent bid or offer in the market. And the implication is that it's getting traded into, and it's either refreshing or so large that it's not going away. It's held, it's holding. But that's very, very short-term order flow talk. That's not something that I'm really leaning off of for that. Someone else mentioned the stats. Yeah, WizKid said, Merritt, I saw your stats on Twitter for these streams. Amazing what 2 to 3 contracts can achieve. So yeah, guys, if y'all haven't gone and just pull up, at Merritt Black, that's 2 R's and 2 T's on X, and check out those stats. I took every trade that was either like this one is, which is kind of held and managed mostly into the stream. Maybe I initiated it just before, or anything that I initiated during the stream and whatnot. There was pretty much nothing that I held really much after the stream. So it was all trades that were on during the stream. Like I said, a small account. And like this guy's saying here in the chat, you can see what kind of results are possible from some good trading. I don't feel like it was just an incredible period or anything like that, but the stats were good. So go check that out. I think, I'm not the type of person who likes to flash P&L. I don't want. Yeah, I don't like it for many reasons. I have great reasons not to show P&L, and I don't think it's helpful actually, for the most part. But I like to show trade fills. If you've followed me for a while, I like to show discussions around process and maybe some stats with no dollars really attached to them. Those kind of things. Those are the kind of things that you can take. That can help people. So when I'm sharing, I'm trying to teach. Right? That's what I'm doing, and I'm trying to inspire. I'm trying to show people things that make them want to be a part of what we're doing at Apteros. That's the only reason I do any of this stuff. Right? Trying to grow something really, really special. Where was I headed with this? I don't remember. 2-3 minutes until the equities open. Yeah, the dollars don't matter. Units of risk matter. The actual stats themselves matter. The trade fills matter. Talking about process, what you can do, those things matter. All right, Meow. Let's get into it here, Meow. So for me, I do think that gold is in a little better position here, Meow, contextually. So that's why I'm kind of focused on it. NASDAQ has been super quiet, super sideways. And go back and pull up the streams. NASDAQ got to the main, ever since we were crashing, right? Just absolutely selling off a month or two ago. That was the upper destination that we've now gotten to, and then we've now just kind of fizzled out at. So it's very not a very interesting market from a contextual point of view right now, the NASDAQ. Doesn't mean we can't scalp it, right? Doesn't mean that we can't find some awesome short-term opportunities with order flow. But for me, if we pull up NASDAQ real quick, Even look at the 30-minute chart. We could just draw a box around this whole Globex session ever since kind of almost the exchange reopened when we sold off, and we have just been absolutely sideways. So we're about to open in the middle of that. I believe we've seen this before in NASDAQ on a stream where I talk about opening in the middle of a balance is absolutely the least interesting potential place for me to put risk on and be trading. So the price action in gold has been pretty gnarly, since I've been looking at it. So we'll see if we get away with something here. I'll keep an eye on NASDAQ on if it pushes either the upper or lower kind of extremes of things of that big balance, pushing towards the highs right now. I'll probably take some off in GC if it starts trying to push back down towards VWAP. Like I said, we are in a pretty crappy trade location here short term. Just seeing if we can get away with it. All right, I'm going to scale, and then let's see what kind of pullback there potentially could be. To potentially get a little more risk on. NASDAQ finding sellers from the highs, continuing to be very tight rotational market. Nothing changed in NQ today so far. The buyers were fairly weak on the push up, especially given that it was at the open. I will say that. Gold's going to make me look stupid for the scale out. That's okay. Ninja does not work natively on Mac. I am on a Mac right now on this stream, just running parallels. When I talk process, I'm talking written rules, instructions, guidelines, key variables, described and thoroughly understood for making all your trading decisions, entering trades, determining bias, determining trade ideas, entering trades in terms of timing them up, managing risk, a risk plan, where stops go, are stops trailed, are you able to add, managing winners when you start to come out, are you all in, all out? Do you scale out? If so, where? Are you allowed to scratch trades? If so, why and when? That's process when I talk about that. Another great and more expensive but great option is to have a virtual machine somewhere. There's plenty of services that offer that, so it's going to be super stable. Power's always on, internet's always on, and you just use your browser to remote into it. I've used what's the Microsoft platform? Azure. I've used a service called Kamatera. I think Ninja has their own, if I'm getting that right. That's a great option to just have it running somewhere on a virtual server, on a Windows machine, right? That's required, and you can just remote into it from your phone, from any device, regardless, browse in a browser. So it's a good way to do it. And someone in the chat mentioned VMware is a good one as well. I traded crude yesterday, banged into a short when some of those things were hitting the headline, kind of de-escalation headlines, and had what turned out to be a data feed issue, I guess you could call it. So as soon as I banged in short a handful of contracts of crude, I was the spread shown, the best bid and best offer shown to me was $1.20 apart, and I had shorted at the bottom of it, and the offer to get out was $1.20 immediately above where I had got in. So this could be a good lesson for you guys, right? So things like this happen. Technology fails, things go wrong. So I knew one of two things were happening at that moment. Either the crude market was broken and I was about to find out about it, or the feed was broken. Thankfully, I had another feed running. So my setup here, I have two different computers. I have two different data feeds and whatnot. And so I pulled up crude on the other feed, and it was actually behaving normally. I hadn't got myself into that predicament that was called. Not only that, but I was ready in an even better way. I had the risk desk for who I was trading through on speed dial, pick up the phone, got him on the line, had my account number saved as their company record for that contact, was able to give them that quickly in case I didn't have, power or whatever, anything, which I did at the time, but it's still important to have that. You don't know the experience level of who you're dealing with. This is kind of a more advanced thing. The guy in the line asked if I wanted him to bang out of the position. And I was like, not at this offer. You would have permission to try to work me out of this order at this price or below. And because you just don't know the experience level. Someone could just absolutely screw you in a bad market with a really unnecessary bad fill. So anyways, that happened to me yesterday. And, I ended up making a decent profit on the trade. I was able to pull up a different execution. I pulled up a dome, actually, which I don't normally use. And I was getting order rejects on exiting from a chart trader, and it actually worked to exit from the dome. So who knows? So yeah, I traded crude recently. It was exciting. But crude oil is such a garbage market. And I say that like that because I love crude oil so much. I wish it was what it used to be. It doesn't flow. It doesn't trade, even when it's in play and the headlines are all about it and it matters. And more people are trading it as increased volume. It still trades like garbage. So RIP. Yeah, you got to have the risk desk number and you got to know your account number. And you can't just have that on whatever computer it is, because guess what? The very issue you might have would be that the computer's messed up, right? That's why on professional trade desks all over the world, what do you see on monitors and on the edges of monitors and whatnot? Sticky notes with important phone numbers and things like that. They are physically written there and physically in the space, not living on the digital world, because the digital world's the one that's going to crap out on you. If the building's burning down, you know, your risk desk number is going to burn up with it, but you've got more important things to deal with. So gold not trading nicely for us. It's just chopping around here. We knew we were compromised with the short-term trade location. I probably won't allow this thing to come down and stop me out. Just kind of depends on how it's trading, the speed of the tape. I'm kind of looking at the VWAP area to hold. We could kind of touch it, test it. We are testing delta neutral from an order flow perspective, so we could see buyers respond. I wish I had more risk on. I really do, but we're compromised on the, as I've said, since we started the stream in terms of short-term location. So like the trade, dislike being long from 34.10. Wish I was long from 34.04. Okay, so Jeff is pointing out something that's really important we could talk about. How to know what contract to trade, right? What expiry? You know, obviously, I think all of us here probably know that, and there's various ways of figuring it out. Jim, that's awesome that your name is Jeff too. I recommend, and we could, you know, I've not done that here in the Ninja platform. We could experiment with it. Do I have daily volume on this? Days until rollover and daily volume. So kind of two things to key into it here. So as you can see on the S&P and on NASDAQ, we're 1 day's past rollover. I'm not even going to talk about that anymore. Forget I talked about Devin's name is Jeff. Jackson's name is probably Jeff. Incredible. I need to go check my birth certificate. Terrible dad humor here this morning. All right. Back to rollover. So if we're interested in well, there you go. I haven't even updated these from June, right? So this is 1 day past rollover. So let's add a symbol here. In Q. How do I do a So let's add another NQ and see if I can like roll it. It's already there, so it's flashing at me. So I'm not sure if we can add multiple. Whoa, oh, that's stocks. Anyways, maybe you guys can help me. We have June NQ here, and you can see its daily volume. It's not even trading. You shouldn't be trading June NQ. And you want to add September, right? NQ as well. And you want to have both of them on the watch list, and you want to watch them over time. So right now you want to have September, NASDAQ and S&P and whatnot. And then you want December, right? So just the next expiry, and you want them both on your watch list. Let's get back to gold here and watch our trade. And you simply want to look at where the volume where the next one, all of a sudden the volume is about the same, right? They're kind of 50-50 volume. And at that point, or if it trades one contract more than the one that you've been trading, you want to start trading the new one. So that's the way to do it. Maybe you guys can help me figure out how to get that on this market analyzer. I seem to be struggling to do that. All right, let's watch this test of VWAP here. And you know, even when it prompts you to do it automatically and things like that, I'm going to exit out of this. You still want to know, you want to be armed with the information of how much volume is trading in each. And because again, you know, computers make mistakes, things like that. You want to be the one making the call as to what contract to trade. And it needs to be when the new expiry is trading half or more of the daily volume. I'm just not sure. Okay, if we're gonna wick through, we might could look for a reentry. Not a great low right here. We knocked on the door of this low several times, so that's something to keep in mind. Try out a reentry here. Yeah, bar charts website will do it, CME's website, things like that. But you might as well have a little watch list in platform that you know, rather than having to go somewhere else to see it. That's my take, at least. Right. That kind of bar chart, whatever it is, overview list or whatever, it just gives you the highest volume ones. And so you'll know, just right there. You don't have to compare. Another benefit, though, if I can push my opinion a little further, is that watching the quote board, over on the bottom right, the market analyzer tab, some type of watch list with both current expiry and the next expiry is again superior, I think. And again, it's right in your platform, so it's convenient and efficient. You're not going to forget to go to the website and check. Is that you can monitor it as it progresses, as it evolves. Not just knowing that day that you need to switch what contract you're trading, but that you know that you're entering, like I put out the tweet on Monday about rollover is upon us, those type things. It's part of, as Crudele does such a good job on this YouTube channel, of setting the tone for what's the market environment right now. And so when you're actually following when the volumes are even starting to get kind of close, it lets you know that, hey, rollover is upon us. Order flow might be a little wonky. Trade might not quite be as clean and as good. A lot of synthetic orders, as I call them, as it's just kind of rolling positions rather than actual like market participant need to do something now type of market decisions. So that's why it's more difficult to trade, especially short term during rollover. So knowing that it's upon you, even getting close, is another benefit of the. All right, it's gone down here several times, so I'm going to bang out of that. I don't like trading from the middle of intraday DVA, and that's what I did from here, and that's what I'm trying to do here. So it's tough, tough spot. Does this work? No, it's just, yes, it did. There we go. I typed it in. So you can see the top two, June and Sep in Q, and we can easily compare those daily volumes, right? So only 42,000 versus 123,000. Well, there we go. Thanks, Tracy. Do alphabetical order so you could have those there. We're back in gold. Just not given a clean momentum today, is it? Just any push up can be just as easily taken all the way back down. It's just not moving cleanly, that's for sure. But hey, that's what we get for trading kind of in the middle around VWAP. Trying to get away with one here. Right. Fed tomorrow. Holiday after that. Goes back to my Monday tweet again. This week is a good week to take that vacation or work on other parts of your trading rather than sitting there and, over trading in a week like this. Whoa. Quite the little blip down. Fortunate that didn't touch the stop. We'll come out of it. I think quarterly is a good amount of time to at least review process documentation and things like that, and then kind of coordinate any tweaks or whatnot with what you're seeing from kind of the past handful of monthly reviews and your stats and overall market conditions. I think quarterly makes a lot of sense. Let's check on NASDAQ. Open up, test the highs of the if you look over at that 30-minute chart again, didn't quite run any stops, but kind of got rejected by weekly VWAP down to the lower end. Ran, a little bit of stops, but not the full ones below the kind of the overnight lows. Back up to the upper end, weekly VWAP again. So not surprising there to see NQ ranging around. It's actually trading a lot better than what I'm trading over in gold in terms of nice little momentum moves, little bear flag, bull flag, and then boom, nice momentum. Like you can trade that, gold, not as nice. Whoa. Wonder if that was the data catching up there or if that was a real actual quick blip. Looks like a nice little recipe for a little dropout right here in gold. I've got a bullish narrative and everything, so I'm not gonna mess with it, down a little bit on the session. Is that a joke or a troll? Omer says, Merritt, can you break down your outfit cost? Should we do it, guys? All right, no watch. I love this. This is one of my favorite t-shirts. Who are you wearing? It's in Seaside, Florida, just outside Destin. They actually have a place called the Day Trader. How cool is that? Can you see it? So a Day Trader t-shirt, it's made in Vietnam, right? I am wearing Lululemon shorts, just khakis. And these shoes, I actually love these shoes. Let's get it in here. Is it Olu Kai's? These things are awesome. Little beachy kind of shoes. Love these things. Show feet. Oh, me. So there you go. Put shoe on head to prove you're real. So there's that little blip down in gold. So, we could easily hunt these stops down here as well. So I think that could be a good signal. If we run stops through this and kind of stabilize, I could look to reinitiate the long idea. You guys are funny. Well, AQ, whose name is what was the name? What was it from earlier? Was it Jeff? Can't remember. It is Jeff. AQ, whose name is Jeff, Poor highs and poor lows. You have to, and I'm sorry in advance for saying this word again. You have to frame them in context. Poor highs and poor lows don't dictate a directional bias. They don't dictate. They're not the most important feature of a market. Poor highs and poor lows are certainly areas that carry significance in terms of the implication of what they mean, right? Kind of an incompleted auction at that point. They're vulnerable to stop runs, things like that. But poor highs and poor lows are not what you use to kind of set the tone. They're not what should really drive being bullish or bearish or things like that. They can be good for targets, good areas to watch for inflections to see if a continuation or failure occurs from there. So to me, poor highs and poor lows are great features, but need to be put in their place, if you will. We have an edge alert from Jimmy Caggs. Crude above a GEX level. All right, I don't want to buy the momentum shifts higher here. I want to see a stop run first. I mean, the NADRA course and the scalping course, it's like my life's work, you know. It's the very best of what I have to put out there for the trading world, to try to develop world-class traders to then get them onto my trading desk. So yeah, they're good. I've never done any statistical testing personally, and I have quite a bit of confidence when I'm trading. Not confidence that I know what's going to happen next, not confidence that the next trade's going to be a winner, just confidence in what I'm doing, confidence that I can handle the worst, right? Like yesterday in Crude. Confidence that I can just make good decisions regardless of the outcome. So gold's really gonna screw me if it just turns and goes without kind of running any stops. But that's how it goes some days. To me, Crude was kind of forecasting a stop run higher coming into the day. So I that's the only thing I could expect in Crude. So do we have the right Crude market? No. Add blank row. CL. Oops. August is an 8. There's the real Crude. So again, we could say, hey, Where is the real crude, right? Let's sort them. So we have July, August, and September crude. Let's check out the volumes. Oh, the answer is clear. 183K for August. So that's the one we'll look at. There we go. So to me, this was a bit of compression coming into the session. On the 30-minute chart here, you can see this level that we're kind of knocking on the door of. And then all of a sudden, we start holding and unable to hold below VWAP. And we kind of, right, we could draw kind of a trend line off these lows and then a horizontal line at the highs, kind of an ascending wedge. So that stop run was just about the only thing that I could see today happening in crude. I'm up at some resistance up here on higher time frames, so I don't have any interest in trying to buy the continuation personally. Back to gold. Thanks for the kind words, Ryan. Which to take first, Nadro or scalping? Probably Nadro, unless you just know beyond a shadow of a doubt that like scalping is where you want to focus and whatnot, then I would do that one first. Nadro is the only one that's going to teach you real higher time frame context and how to kind of get those higher time frame reads and directional bias and lines in the sand. The scalping course's focus is on order flow, setting the tone with kind of DVA and things that I'm looking at here, and how to develop a playbook using those tools and how to really get really good at trading order flow. The beauty of each of the courses is that it's not just buy here, sell here. It teaches you to fish, right? It teaches you to apply frameworks and understandings and little layers of edges on different timeframes and different tools that you can structure in a way that makes sense for you. And I don't, and that's not something that to say that it's ambiguous and I don't really teach you, because it's very, very good. It really does teach you how to do it. So, and then obviously you get to be a part of our community. We have a Discord. It's only for students. We don't want a free-for-all chat with a bunch of egos and maniacs. We want people who are really serious and speak the same language. You might incorporate fibs or other things or gex levels or whatever. That's fantastic. There's other people in our community that do that as well. But you understand the language of Nadro. You understand how to talk narrative and long-term VWAPs and main narrative supporting cast and all those kind of things. Or some of the scalping setups for that area of the Discord. All right. Maybe we get our stop run through the area. How do you determine what time frame to trade off of? It's a good question. And as I can tell from what you're using, you need some help because you use a 4,181 tick chart. That one tick makes zero difference, right? So just there's no magic time frames, just round it to a nice little whole number. The time frame should match what you're trying to accomplish as a trader. Are you looking to scalp very short term over 30 seconds to a couple of minutes, direct momentum in places? If so, you need a low time frame to see that, right? You can't do that on a 10,000 volume chart or a 30-minute chart or maybe even a 5-minute chart. You can't do it, right? You could apply that to those time frames and do that, but not on the 30 seconds to a couple minutes. Like I said, it's just not going to work. So it's as simple as that. There's no magic time frame. Markets are fractal in nature. There's all kinds of things happening across all kinds of time frames. It's all one set of data, right? It's all one thing. It's just different ways of viewing it. So pick something that suits what you're trying to accomplish with timing entries, with managing risk, with managing trades that work, to look for something to take scales. It's yeah, I wasn't trying to make too much fun of you, but yeah. I think the lower time frame you go, the more noise you have to contend with, the more paper cuts are going to be a part of your trading. Especially if you're just trying to use the real low time frame to time up the entry and then actually hold it, for something like on the 15-minute or something, right? You're by design of that going to have a lower win percent. So it's not necessarily a bad thing. There's really two reasons I would stop trading on a day. One would be hitting a daily loss limit. The other would be a real degradation in my performance or state, right? If I'm just making a lot of really bad decisions, mental framework is off, just not firing on all cylinders. If I can, I want to pull myself off the mound and just go ahead and shut it down. It's a difficult thing to do for someone who's kind of competitive and things like that. But you can learn to do it. The other thing is just straight up the DLL. Everyone, on my desk trades with the DLL. It's a must-have. You give yourself ample leash to take risk and do what you need to do to potentially be successful on a session in terms of profitable, and catching a move you're trying to catch. And if, just like today in gold here, if it's too messy, it's too messy, right? Sometimes you just got to tip your cap to the market and, you traded well. You tried to do things. You're not doing things that are stupid or outside of process or whatever. And you don't get it. Sometimes you run into DLL. It's fine. So NQ finally ran what I would call the main stops of the session. Right? If you look here on that 30-minute chart, we finally ran those stops. So I put on a little short. I really liked what I saw at first glance on the order flow with the lack of buyers on that small retest after the rejection from delta neutral, by the way, right? NADRO stands for narrative, acceptance, developing value, rhythm, and order flow. It's a top-down approach in that order of those items that we teach you how to assess to then build a playbook and layer kind of some incremental edge. Yeah, a little bit of absorption, but as we've drifted towards that stop a couple times, there's just been no buying. So, we might get a few trapped sellers here that could squeeze it. That's certainly a possibility, Nicholas. You're correct. But until I start seeing them aggressively lifting offers, bailing, then I actually had confidence as the market was drifting towards that stop that I was not going to scratch out of it because I didn't see anything to scare me away. But you're right, the absorption is not a good look for the immediate downside. Yeah, you too. Guys, anything you want to know about Apteros, whether it's natural related or our prop desk, you can easily find us. apterostrading.com or just go to any of our Twitter accounts. Should be linked in the description of the feed, I assume. Looks like I didn't make the list. But it's just my name at Merritt Black, 2 R's, 2 T's. So we've got our developing value high here, finding some buyers in Q. Nothing crazy, but certainly this is the spot where if we're going to hold the retest of this big overnight balance, this is where it'll happen from, right? So this is the key moment for whether the bulls can do something. I think that order flow is clearly giving favor to the bears. So that's why I am short. Order flow can certainly mislead us into losing trades just like anything else. Markets are random to a high degree. We just have frameworks that we can apply. So could be a good spot to kind of tighten this stop. Kind of in this region here. If we're going to find these buyers, you know, and this little downtrend starts to kind of break, that's probably the point where I want to reassess, you know, this scalp. So like I said, this is the inflection right here. I have no clue which way it's going to go. All I know is that sellers have been in control since we tested delta neutral, and got a little divergence into the high. Sellers dominate, buyers are weak, sellers are strong. So okay, so we're flat. Gave it a good shot. I like the idea. GC running stops. So we finally really got the setup we're looking for here in gold. Just need to clear this yellow, you know, zone that I had drawn for this trade to kind of be in the clear and confirm the stop run. Yeah, I'd reach out to NinjaTrader support if you want this the template of this workspace. I believe they have it. That line is the mid pivot. So like the 50% of the entire kind of Globex range? Is that what you're saying? Oh, like old school pivots. I got you. No, I like my coffee with quite a bit of cream in it. No, I don't use ATR for anything. Stopped out. Trading well here. I don't feel negative about any of the trades we've taken here today. I didn't get overly active from the middle of DVA, which I was concerned about. We put on a really good attempt from here coming into the stream. Tried some re-entries here, which is a nice spot with delta neutral still holding. Then notice we went hands off. Sellers start to take more control of the tape. We're holding negative delta. I looked for this stop run, and we finally got it, and I gave it a shot. We might give it another shot here after that nasty little blip into the -2. And then the NQ trade, fantastic trade, but we shorted this little breakdown right here. but the buyers ended up holding this upper standard deviation, and so didn't get the momentum we needed to hold it. That's right, art of the reentry. No, I'm very much against, even with the conversation I had with folks on stream last week. I stand by it. I am against the use of multiple U.S. indices at the same time to say this one's strong, this one's weak, and to make trade decisions based on that. I have some really good reasons for that. For example, a lot of times what people will do is they will look at, hey, look, NQ is down 0.4%, while the ES and YM are down 0.75%. So the NQ is the strongest. It's kind of having a hard time going down, those kind of things. Well, in order to really, really, really actually make that comparison, wouldn't you need to also, like, what if on the day before NQ was weaker by that same offset, right? 0.35% or something. And so now they're actually back in line by being different. That's constantly happening. I stand by what I said last week about if you look at a spread chart, the difference in movement over time, a rolling period, whatever, they fall very much in line. I think it's only the very, very, very high frequency machines that can take advantage of dislocations, if you will, between the most active liquid futures markets in the world. But you know what? I don't have all the answers, but that's my opinion. Still unchanged, even with dialogue with some other people who think otherwise. Yeah, big moves down in the pound, the euro, the yen. Corn. What's up, neighbor? GK, who goes by Jeff. So at this point, I think it's important to note sellers dominating GC. We attempted the little stop run through the level of interest, and it has just simply persisted. This is super important, guys. You don't see me continuing to stick with that idea, to get caught up in that and keep trying it and keep trying it and keep trying it. You got to know where the idea is like invalidated, and that the other side of the market is strong, and it's just idiotic to keep putting risk on and losing more. So for me to express this idea again, I'll need to see something change in that regard, right? Whether that's a strong shift in the order flow, whether that's a restabilization above this level, 3402, one of those things would need to happen in gold for me to start to express that long idea again. So that's really, really important. Yeah, smoke them for all my gold profiling work. I will have 30-minute profiles that start at 7:20 my time. Um, so just just because it doesn't line up with the top and bottoms of the hour, it's just different, but it's okay. And then you end up with one period that's a little shorter for the last 30 minutes, profiles. So no big deal. If NQ set up another kind of weak move higher, I look to try to take advantage of this, continued upper edge trade location, right? Look at that. Quite the dump in gold. But I say it all the time, guys. If you have a really nice line in the sand for an idea, a lot of times when it is violated or invalidated, if you see a big move, a big strong reaction, a lot of energy as that happens, your level was good. It's actually a good thing when you see that. Doesn't mean like, oh gosh, I was so wrong. I'm so dumb. That's so terrible. No, it's the opposite. When it's explosive through an area where your thesis gets invalidated, it really is confirmation that you had a really good read. The benefits of being a short-term trader is that when I was wrong real quick, right? We got long on this bounce and then we're out as it comes towards this low. This is just slower participants trading higher time frames, admitting that, oh yeah, we are wrong across that area. Things are changing. So, and then as is typical, you see some of the highest volume in terms of delta towards the end of the move, which is kind of some of the largest participants stopping out, and then it's able to kind of bounce from there and figure out whether it's going to trend or mean revert. Yeah, the cumulative in delta is just a running summation of delta, right? It's just the cumulative tally of it. That's all. Each bar has its own delta, and you could either start every one of those from zero and show the bar delta on kind of a flatter axis, or you can show it cumulatively. It's all the same data, just different ways of viewing it. I don't know what a delta flip is. That's a what Stowe, you could ask Stowe and those guys. That's something that they talk about. I don't know what it is. I think it's maybe just they use some colored bars to signify that the general trend of the delta, maybe like smooth it out a little bit would be my guess. And then when that changes, that could be a delta flip, right? Change in who the dominant aggressive force of the market. That would be my guess, but I don't know. How long does it take me from when I sit down and start looking at a chart to when I'm ready to trade an idea in a given symbol? For a scalp, as you kind of saw there in NASDAQ, it was almost instantaneous, right? I glanced at price and delta. I understood where we were contextually with that Globex range and weekly VWAP, and I liked the short from there. For a NADRO narrative type trade, it can also be pretty quick at my level of experience with it. Call it 1 minute, things like that. For a newer trader, newer NADRO person who's stepping through all the time frames and trying to figure out if each one is bullish, bearish, neutral, if there's fresh condition shifts, all the stuff that we look for, likely destinations, and then start to look for confluence, both price confluence and directional bias confluence amongst the time frames, and really rank and distill that down into like 3 main hypos. It could take you 30 minutes to do that as a beginner, and that's okay. I certainly remember when I had a notebook out in front of me that I came up with like a process for doing a pre-market prep each day to remind myself of all the things I want to ask questions and get to answers for per market and per time frame, and then how to put those together and to remember to put them together and to remember to look for certain things. I had a checklist to do that, and I was slow at it, right? That's just how it is at the start. But then you start to internalize a lot of that. Now I certainly don't need a checklist to do a pre-market prep on a market. But that's one thing that a lot of traders I think don't appreciate enough or don't want to admit enough is that early developing traders need to behave differently than very, very experienced high-level traders. You don't just try to, and I think the same goes for professional sports, right? Like watching the US Open last week. There's shots that these guys are hitting that, I'm not capable of. And it would be in my best interest not to try to be like that and not to try to pull off those shots that I can't, you know? Let's see what kind of headlines we got. Germany expects a deal with U.S. tariffs before the summer's over. That's coming from them. Trying to figure out something that might be driving the some more missiles landing in open fields in Israel. Yeah, I don't see anything different out there that would be driving a huge move in the dollar on my feeds. Maybe Tracy knows something that I don't. Maybe it's a just kind of a technical move. If I analyze the euro, the pound, the yen, they're all kind of falling off of upper extremes after moves up. So nothing really substantial, right? Like the move down in the pound, in the euro, it's still well within, last week's range and distributions and things like that. So it's nothing groundbreaking in terms of where the pricing is happening. Could have just been a stop run through the week's lows, this week's lows, that is. We should ask Jeff. That's a good one.
My name is Jeff.
Continue to see the weaker buying in NASDAQ, and we're back up here at this area where I had tried kind of the initial short, so we'll put it back on. Do I care? Utkarsh, who goes by Jeff, do I care that multiple days volume profiles overlap? Yeah. I mean, it's significant in that the market is balancing. That's framing a context that we can understand. Balance is all that really exists in my mind in markets. A lot of people have a hard time grasping what the implications of that, but trends are really just reversions to old balances, leaving the most recent balances and things like that, right? Unless you're in all-time highs, then it's just pure price discovery. But balance is everything. And, my edge comes from the edges, as I like to say, and it comes from the edges of balance areas, right? Yeah, certainly, Robert or Robert. As we saw with my trading in gold, I was still putting on some trades, even though the ideal place was after a stop run lower. I was still kind of chasing it a little bit. And I talked at that time about how it was a compromised location and things like that. I still thought it was worth it. We got enough to trigger into some positions, and they tried to work for quite a while. And so it's not that I will always wait for a stop run. It's that I'm very much aware of when there is potential for it, and it will, as you saw, adjust how it will affect how I behave. So you saw me scratching out of those trades and reducing risk real quickly and things like that from the middle of DVA pre-stop run. And then when you saw me take the trade post stop run, I gave it room. I gave it a chance to work. So it drives how I handle things, how aggressive I am, how conservative I am with reducing risk, scaling, things like that. That's really what it dictates for me. Oof. So NQ just got us and then started working. One of those days. Gold back up to this level. Wow. Just a big, nasty inventory clear there in gold. We'll see if it starts to stabilize back in this area. Could reset up that same opportunity in the morning. See you 20. I agree. Thanks for the update, Tracy. Just a technical bounce. Risk off flows, short covering ahead of FOMC, yada, yada, yada. So nothing substantial in currencies, but certainly a little decent intraday move there.
Merritt, good morning, my friend.
Yo, Stowe. Morning. How are you?
I'm doing good, brother. How are you?
Doing good. Getting beat up here today. I think I'm like 0 for 6, but c'est la vie.
Yeah, roll week, dude. What are you gonna do?
Yep. I've kept it light. I've kept things a little smaller. So we're certainly limiting the damage. But as we were talking about earlier in the chat, not sure if you were in the green room at that time or whatnot, but good trades, right? Good decisions, good spots. So yeah.
Yep. Well, that's good. Yeah, same. I try to take roll week with a grain of salt. My edge basically gets cut in half as they split the volume between two contracts. So
that's a funny way to look at it.
I'm like, all right, you guys want to split it? Well, I guess my edge gets split for a week then too. Yeah, I got slipped a ton of points on MNQ too, which is also something that happens a lot during roll week to me. But yeah.
Did you hear? I thought I got slipped $1.20 in crude yesterday.
Oh no, I did not.
That was fun. I banged in several contracts short crude, and all of a sudden it just showed me the bid offer was $1.20, and I was short at the at the bid, of course, and it was just showing all that negative P&L. I was like, oh man. Immediately got on with the risk desk, sorted it out, that kind of thing. So yeah, pretty fun.
Oh yeah, crude. Nothing slips you quite like crude. I guess maybe nat gas, but I've never touched that thing. As it, is called the Widowmaker, I think, right? Is that what they call that thing?
I don't know, but it can certainly even gold gold can have massive washouts.
Yep.
At least it used to. Actually, now that I think about it, I haven't really experienced it the past couple of years, but pre 3-4 years ago, gold could hurt you real quick. And I mean like
Yeah.
not just like a fast move like NQ, like gappy kind of like nasty kind of instantaneous moves.
Yes. We were
Seems to
it
have
was
toned down.
I think it was last Thursday. I can't remember. Whenever there was a ton of internet outages, like Google and Amazon cloud stuff all went out. I got into this big conversation with the chat about like, hey man, you can lose more money than you've gotten this thing,
Yeah.
Like if
I
price
posted
goes,
that when I posted my stats on Twitter the other day. I was like, you can lose more than you have in your account. That's Ninja didn't ask me to post that. I wanted people to know.
Yep. Yeah, man. I was actually shocked at how many people in the chat were like, that's not true. Your broker will stop you out. And I'm like, wait, no, hold on. We got to talk about this.
Yeah. They will stop you out, but that doesn't mean that they'll stop you out at a market price guaranteed that's you're able to cover with the amount of money you have in the account.
Yep.
They'll
Yeah,
say,
for sure.
hey, we stopped you out and cut us a check.
Yes. There's a reason why that disclaimer gets read all the time.
Yeah. What are you looking
cool.
at markets wise here? You are you long NQ from VWAP?
No. So the only thing I did today, man, it disappeared again. We came down and got into this. I'm kind of looking at this 066 spot it's kind of the top of that last balance area that we made. I'm gonna pull this up here. Yeah, we're kind of floating. I'm trying to stay long into this node if we're going to hold this piece of volume. So
over what time, over what period is that profile?
So these are so this is a rolling 5-day.
5 days.
Which is pretty much the only, that's the highest time frame I look at, and that's also the only rolling profile I use too.
Okay.
But yeah, so this is the last 5 days, and I'm just looking at this node if we're going to keep rotating up here. So I leaned long off the overnight low a couple times. Just got some scalpy stuff off. I'm just trying to take some base hits though, with roll week and everything.
Yeah.
Cool. Yeah. So nothing really too magical. I'm more focused on my Federal Reserve trading cards today, honestly, Merritt. I'll give you this. So I put a poll up. We'll see what everybody thinks. I think everybody thinks it's a stupid idea, but I'll let you weigh in too. Do you think I should print the Fed Reserve trading cards, or do you think it's too silly to make a reality?
I can't even comprehend what you're saying to me right now.
Okay,
what
cool.
does this even mean?
All right. So you know how, do you ever collect baseball cards at all?
Like not seriously, but yeah, I had some as a kid. Yeah.
Okay, cool. So same theory, baseball card set where so I went through, I got like 4 variants in. I'm relatively into baseball cards, so this speaks to me.
Okay.
But it's all current Fed members. And then we'd also have like a Legends series and go back and look at Volcker and
Bernanke.
Yep, exactly. And I made some mock-ups. They're on my Twitter. You can go look at them if you want.
So you made them in terms of like, how did you make them?
I just designed. Medium? I just went through. I would print real trading cards if people want to do it. And the idea was I would go. I think I can make them pretty cheap. I got into the manufacturing element of it over the weekend, and I'm like, this looks pretty good. And I think we could do it. And I would just, if it made any money, which it wouldn't. But if it did, I would just donate it to my food bank, which is what I normally
but
spend money to.
Are they like hand drawn, or are you doing them digitally, or like?
So I would have, yeah. So this is the tricky part. I also had to figure out this weekend.
Copyright stuff, yeah.
So there's a ton of pictures of every Fed Reserve member that is automatically in the public domain. So I wouldn't have to clear anything as long as I use those images. But yeah, I'd have to go through and get an image for everybody, crop it myself, put it into the template. Yeah. But I made 3 different templates. I made the legend card, the basic signature card, and then a special Jackson Hole edition Prism variant. But yeah, So
Why
that's the
not? Why stop there? Let's get commemorative coins. Let's get late night TV commercials.
That's cool. We could do coins. Well, then I thought if I'm going to do the Fed, like we should do everybody on the Ninja channel too. Might as well give everybody a card, and that way I could I could ask permission for those photos.
Nice.
I'm gonna email some Fed chairs this idea and see if anybody kicks anything back. Maybe some of these people have a sense of humor and they'd write me back.
Get Greenspan with the briefcase in the left hand.
See? Exactly. See, there's infinite amount of ideas here.
That's funny.
I forget.
So
I forget
yeah,
when I
an
came up with
opinion
this.
on it.
You can just go vote. You don't have to tell me how bad an idea is.
No,
Leo's been telling me this idea was terrible for weeks.
It's not ever something that I'm trying to remove myself from this. It's not something that I would be interested in, but
Okay.
I think it could be a good idea. Like, why not? There's myself included, just in a different way, are market nerds. So you're going to have a bunch of folks out there that would be, it's great office decor for folks in finance and trading.
Right?
If you get a little matte frame around them or something, make sure it's a real limited run. Make sure that there's like a demand there kind of for them, and that once they're out there, then you got to have the second market for it.
Yeah.
So yeah, I don't know.
Well, we'll see what the poll
easily
says.
be more successful than NFTs. Let's put it that way.
Right, because they would exist. You could actually hold it in your hand.
Yeah.
It wouldn't just be. I mean, I guess I could just do NFTs and just post it. That would be a lot easier. But it was wild. I got into I know this is not market related at all, but I spent the weekend like, man, there's a lot of card manufacturers out here that you can just make like custom cards if you wanted to like do that for Christmas for your family. Yeah, it's really funny. So that's cool. That's what I'm up to on Roll Week.
Yeah. Nice.
Oh. Nil's not buying any. Yeah, the chat's giving me the feedback. Oh, thank you. NinjaTrader posted the link. Yeah, everybody go vote in the poll.
Get your girlfriend a full set of pet chair cards.
Well, I made Jim's favorite. I made Goldsby's Jim's favorite Fed, and so I made him a Volcker card and a Powell card. So this is the beta.
Nice.
Yeah.
Well, I don't think it's I like the that you've got the volume profile level. I don't think it's a good sign for upside that NQ poked above this big overnight balance, failed, and not only failed, but I'm not sure what your order flow shows, but the cumulative delta got rocked right off of delta neutral, zero delta for the session, right at that high, and then the attempts higher since have been feeble in terms of buyers getting behind it, lifting offers.
Yeah. If I could draw, this is a really good way to look at that too. It's I mean, look at all this volume we've left up here. Look at all these wicks. Every time we get up into this node. So now it looks like we're kicking off of this thing and we might be rotating back down. The only thing that's keeping me in the game is we're still above this previous month value area high, like all these little wicks. So that's also why I'm leaning long. I think that was also
I've got that around like 21,700. Is that kind of where you have it?
Oh no, I've got it at 22,071.
Okay.
I think. This is also a big part of roll week problems.
Oh, that's last month's high.
Yeah.
Yeah, that's not a value. Okay, cool. Yeah, last month's high. I'm with you. Yeah, I've got last month's value area high, which is it was a pretty good distribution because we knocked on the door there almost all the first half of the month, and then we just had that blip through it at the end of the month around that 21,700. that's a pretty substantial medium-term swing time frame line in the sand.
Yep, I agree with that. This is also a roll problem for me too. This week, all my charts get extremely wonky, so that might be a previous month value area high for some weird reason because Ninja back adjusted maybe.
Oh yeah, yeah. I mean, if you're off on the back adjust by a day or two here or there, you end up with quite different prices for what your your stuff is. It is a constant battle as a continuous volume-based rollover back adjusted type of contract you're always going to have to kind of deal with the nuances of it.
Dang it. I thought I sorted my Ninja one, but this is the first time I've ever tried to roll all these charts like this for Ninja. Okay. Okay, cool. That's good to know. Why do they do this to us, Merritt? Why do they make just to make the game harder? Can we just trade one thing? Can we just have CFDs or whatever? Isn't that just one continuous thing? People in London don't have to worry about rolling.
Theoretically, if let's go back to the real like producer hedger type, the real reason for futures markets.
Yeah.
Do you need the legal expiry, or would it be enough to have let's just say it was one continuous thing, like a stock or whatever? Would that pose any additional problems to hedgers and producers and stuff?
I don't think so.
Is the expiry make it like real clean for them?
How about this? What if we did it that anything you can actually take delivery on, like in real life, those can have quarterly expirations, but everything else,
yes,
they're not going to drop MNQ off at my door.
Ones, yes. To me, that makes sense.
Yeah. That's what I would like.
I do think, even for some financials, though, especially like when I think of the currencies and hedging currency risk on a future huge business transaction that's going to be in yen or like whatever. The only thing I can think of here, and we're really nerding out on this, is liquidity. So if it just expires and it's got like a settlement, you're just like, it's a contract. You're guaranteed at that price and it's all good. But if you've got to actually like work out of the order, that you got to either have a trading desk or you got to kind of know what you're doing there with that, or I don't know.
That's true.
I bet Crudele would have a good, or maybe even Jim would have good insight on pros and cons to a true continuous product versus not.
No, that's true. That's a good question for me later for Jim. I'll be on in the afternoon and I'll bother Jim with that. I got so many questions for him anyways.
Sweet.
Also, I'm going to make him buy this deck of cards no matter what happens.
I love it. Well, dude, I'm out of here. I got some stuff to take care of, but good luck,
sounds
man,
good, brother.
in this chop fest.
All right, sounds good. We'll try not to die. Appreciate you, Merritt. I'll see you next week, homie.
Take care, brother. See you.
Yes, ask Jim about expiry. Okay. Cool. Well, that was fun. Yeah, every time roll week comes around, it's not the most fun of all time. Many million annoyances piling up, including massive slippage. This was a good one. Let me see if I can find it. I caught a wild stop. I got slipped like a billion points down here. This 41 stop. Yeah, that was silly. But anyways, how's it going, chat? Is everybody having a good, a little pump there? Everybody having a good Tuesday? Thanks, Damon. It's a very contentious topic. People either really love this idea or really don't like this idea. So That's how I know I'm onto a good thing. Yeah, exactly. Crypto has perpetual contracts. I mean, the whole thing's just a scoreboard, right? I don't know. I'm just kidding. I don't know. Hey, Tracy, good morning. All right, just looking at the chat. Morning, Omni. Morning, brother. So I got caught up talking to Merritt. I missed all this chat stuff. I think Tracy laughing extremely hard at my card idea means it's also good. Tracy, make sure you get in there and vote yes. Albu's buying them. I think I saw you vote on Twitter. Thank you. Oh, Aaron says Ninja should sponsor this. That'd be great. All projects are a good idea if it's other people's money, right? Yeah, so Aaron, the idea would be the stats on the back would be like voting history, a hawk dove leaning percentage. So like we'd give them an actual batting average and a quote, like quick history about that person, like maybe educational background. Yeah. the the CAG silver dollar. That's cool. We should do that, Rack City. You're right. Well, I think I would get, yeah, Bullard would be a sick card. He was my favorite. Oh, yeah. Nobody's ever going to be as close to my heart as Bullard was. I hope he gets, I don't know if he retired or if he's just not a voting member this year. But that guy used to come out of nowhere years ago and just destroy every pump that ever existed. That guy hated QE. I'm try to get this. I'm try to go into my indicators and get this range back. Not sure why it keeps bailing on me. I'd like to see the European opening range and show it to you, and then we trade off of it. So let me see. Maybe we'll change the color a little bit and try to get it to show back up. Must be something about how I set up this calculation. There we go. It's back. All right, cool. So now we can do our recap, do our prep. So yeah, not super excited to come into today just because it was, obviously we had a bunch of geopolitical news and we're in this position again, which is pretty common, where, something bad might happen. You don't know how the market's going to react to that. We've kind of lived through this a couple times with, Russia, Ukraine stuff. And, it's difficult to look at this objectively and, because we're ultimately, we're in the market to, buy and sell. And this is a relatively faceless thing. But of course, real people in war situations is, not something to be flippant about. So, yeah, when we talk about this, I just want to think about that a little bit. And I want to make sure I'm being cautious not to be, too just dismissive of the actual human consequences of, geopolitical conflicts. So yeah, it is something you always have to have in the back of your mind where, black swanish things can happen. Of course, there's always a left tail risk for everything. There's never there's always a non-zero chance that anything can happen. So keeping that in mind, we sold off on, just a bunch of news headlines that Trump was leaving the G7 summit early to do something. Nobody ever really knows what it was. So like, it's just a lot of noise. And so I try not to pay attention to it from a market standpoint, especially those little news drops. Data stuff is different. For our purposes, we're still just scalping points. We just need to keep that in mind. Anyway, so 3 o'clock rolls around. It looks like Europe is pretty short off of this 80 pivot ish, but it's still getting chopped up. So like this is not a very clear, European opening range being respected situation for me. We obviously sold off from all the way up here at, the 70s where the previous day close was. So overnight high is very high, and we haven't really been able to get back up into this range that news sell-off came from to begin with. So coming into this day, a little cautious, a little skeptical. It's also roll week. It's only Tuesday, so the volume is split. And like I explained to Merritt, when the order flow is split in two different places and I can only look at one, it's literally like cutting my edge in half. So you have to be cognizant of that. But yeah, I'm still in here trying to chop some wood and, just scalp some longs. Took that stop out sucked. But yeah, just leaning long off of these lows. Once we got back down here, some order flow stepped in, and that's pretty much it. This was a pretty good sequence actually. Once I was able to get onto this, bought here around 34s, scaled out at the -1, and then scaled again at RTH open. And then once we got this pullback, I added back in here. This was a very good ad. I've been trying to get a little more confident with my ads. I'll zoom in here so you can see that specific sequence a little better. So here's our original long. Scaled out, scaled out, scaled out. And we still had one position from down here at 34 because, we're in 3 lots at a time. And then I added back in all 4 lots. So back to full size here, tucked my stop up behind this candle, behind this wick. And then, yeah, we got a pretty immediate response. Took a bunch more off, bought it again, came back down here. And, we retested this European opening range. This is the RTH open here. So got long again here. And you could see like, this is the other thing that happens in roll week. Do you see how this arrow is pointing to a candle that like you can't see? That's because MNQ volume is so much more than NQ that it created like that many more candles. So the MNQ candle is actually over here, just hidden. But yeah, bought here and then, scaled. I left one on as we got into 10 o'clock because we did have some green folder news, but with the thin book, I didn't want to mess around. And we ended up taking those off up here. And then this was a weird misclick that happened where I wanted to sell my last lot but had 4 selected instead of 1. So it immediately put me short 3, and then I just flattened out of that for a scratch. But yeah, and that's all we've done. And now we're kind of just poking around. Let's zoom back up and see we got a pretty big sell off of something down to VWAP there. But this looks like not really anything I want to engage in still. I'd like to see it come. I'd like to see this tested again, RTH VWAP. But we haven't even really left the 5-minute opening range at all. Total range is 100 points. Not really any A plus anything, any B plus anything at the moment. So yeah. Nil, I just do 3 a.m. Eastern Standard Time, and 30-second opening range from that. So it's just 30 seconds. Morning, Mark. You know, Damon, that's funny. Damon says you should figure out how to make a collectible game. This company that I was looking at to print the cards, they print like they're doing that. Like they're for people that make up their own board games and want to get them printed. And it's so cool. I also got completely distracted with that part too. I got sucked into that. I'm like, man, I've never had an idea. I've never had an idea that was like big or cool enough to make it like my own board game, like the Cones of Dunshire. I don't know if you are all familiar with Parks and Recreation, but I've never had my own Cone of Dunshire moment. But if I did, there's a company out there that, you know, can help you realize your dream. Let me see if I missed any questions. Yeah, Firmament, it's just like, I mean, it's going to get whipped around because again, the volume is split. And also the difference between NQ and MNQ is going to be occasionally significant on roll week. So I know it's a pretty common practice to just trade MNQ while looking at NQ, and normally you get away with that pretty consequence free. But they are two different products ultimately, and a lot of people don't realize that. So when you're in one position, like occasionally a price can trade on MNQ that does not trade on NQ, and then you still get stopped. So it's always important to make sure you understand the products that you're trading, the risk that's involved, all that stuff. It's not something that you should ever take for granted. Mark, what is Dow theory? I know what Elliott waves are, but I don't know what Dow theory is. Oh, rogue shots. I do with the 30-second range. I'm just basically trying to see the initial open for London. So, 30 seconds gives me that glimpse. I mean, I could just plot the line. I would just rather it be a zone. As you know, Globex is thin and the overnight session is pretty thin. So, I'll give the Europe zone 30 seconds to figure out what it wants to do, and then I consider that to be their open. ASM asks, Stowe, how do rollovers impact your contract size and your daily trade frequency? I mean, I haven't really felt the need to size down. I don't think it's affected my trade frequency either. It's just something else to be cognizant about. I'm trying to be more deliberate and intentional. The main, I guess, main way it affects me is it eliminates some setups from the playbook because of the things that I watch. Like I'm watching the DOM, I'm watching time and sales, I'm watching, active delta positioning. And usually all of that is on one contract. And now it's on two, and I'm only looking at one. So I'm aware that there's other orders being done somewhere else, like almost in an equal amount for the next couple days. So I just take those plays off the playbook. There's also, I was talking about it yesterday. There's also some dumb algo or computer program that just like it brackets NQ. I don't know if it's on ES right now, but they usually throw one on ES too, especially in the afternoons. And you'll see it as price moves, it just follows it up and down on either side, bid and offer. And that also confuses my DOM reads. So I'm just aware that um my edge is a little dull in a couple places. So I just don't take those trades because they're not really there. I lean a lot more on structural stuff than anything else. Morning, Norseman. Diego asks, is there a way to see the delta flips with cumulative delta? I don't really know what you mean, bud. Like if I put a cumulative delta study on and then put the delta map study on that? I mean, I don't know. All right, here comes the turn. See if we can get down here. Test this spot. I will definitely buy this down here if we can get down to 70. But everything looks like it's drying up. So I'm going to have to be extremely patient today, which is cool. It's okay. I put this, I put this, new position window on my chart. And then ever since I put it there, I haven't been in a position. So I still don't quite know how that works, but hopefully we can get in a position at some point and find out. But this should be a more clear way for you all to see, how many lots I'm in, how many points plus or minus, etc. So that Mike made that for us. So thank you, Mike. I need to be old. I am old. What are you talking about, Fred? I'm pretty old. 40's not young. Hmm. Yeah, my indicators are all messed up. That's very weird. Let's see if I can fix that. That's what's up. All right, that's funny. So I had a VWAP on from that London spot. Man, I should put it back on. Maybe that's some alpha VWAP from the London Open. Hold on, let me put it back. We'll see if we stumble on some accidental alpha. This is how alpha is generated, by the way, by making mistakes on your chart and then getting an idea. So what happens if we anchor a VWAP to the London Open? Let's see. Let's see how that thing works. Okay. So this is anchored to a custom session that I made, which is 3 a.m. to 4 p.m. my time, Eastern time. All right, let's see. Okay. This is our London. This is our custom VWAP right here. Hey, it's not bad. It's not bad. That's funny. Yeah, exactly. Alpha's just kind of a joke. If you can make money, that's your alpha. The end. Don't let anybody tell you any different. Hey, morning, Chris. Oh, thanks, bud. Just because I got that haircut. Hashtag blessed. I mean, Sai, I don't know if that's going to have the market pinned. Could be. I think if anything, rollover has a better chance to pin the market than, just waiting to see what Trump is actually up to or not up to. Diego, no. To answer your question, okay. So you're following that. Okay. So no, this is not the same as looking at cumulative delta. So the way that the delta flip is calculated is it's taking delta dominance of a set amount of candles that you've predetermined, and then when that delta dominance changes from that look back period, that's when it will show you the star. So say like it's taking these, for example, this delta flip here, this blue star, it's taking these candles, and then when the delta dominance of this specific look back changes, then it's going to print that star at this candle close. Same with this. So we have this sell dominance that changed, prints the star. And then same theory here. This is bid dominance. It changed, prints the star. So it's not like a rolling. It's not a rolling cumulative delta for the entire session. It's looking at the specific look back period. So it is different than that. We really just testing a strategy with the London VWAP? That's cool. It's never occurred to me once to use it. It's like, okay, this is cool though. As I accidentally plotted that on my chart. Oh, no problem, homie. I appreciate you. I love the questions, That's what I'm doing. That's why I'm standing here. Oh, that's cool, man. I'd get AJ on here for sure. He's a pretty busy guy though. I can barely get him in the room to do a podcast. Yeah, I wish we had more to do today. Came up short here. Not quite low enough for me. You know, we're just kind of like, yeah, we're just banging out in this tiny range. There's been a lot of absorption up there too. I don't really want to short. I just don't. I mean, you know me. I don't really like to short anyway, but I especially don't like to short stuff like this massive, sell off right out the. I mean, I know we're respecting it, but like I've seen those get walked back so many times, and it's just like I can't be part of that. I can't jump on that bandwagon unless I see it break lower. I need to see like the day itself set up as a trend down, like RTH itself set up as a trend down before I'm willing to get on board with, being a part of that Globex Open move. I've just been hurt so many times. It is a good day to read a book. That's true. I got to cut my grass. It's been raining all weekend, so I'm probably going to go do that when this stream's done. Hey, Sam. ASM asks, when do I typically use anchored VWAP in my trading? I'll use it when, there's a clear high or a clear low, and I'm trying to see if there's going to be continuation off of that. Like if we, if we weren't balancing right now and this was the low and price was continuing to move higher, I put a VWAP down here so we could see. But yeah, we're not trending. VWAP is kind of just a way for me to find and identify a micro trend within the day and, see if there are some areas that are being respected. Like I bet this low, a VWAP off this low probably worked here for a little bit with these pullbacks. But this isn't really the day type to use it on. So VWAP. Omni, that's the 30-second opening range for London. I try to put it there every day, but sometimes that study like kicks it off for some reason and I have to reset it. I don't know why. Did you think so, Chubby Panda? The ES one? I got that on the side. Let me see. Yeah, I mean, you think so? I don't really think so. Yeah, just looking at this order flow, even on ES, is really funny. Ooh, it's the chime. That's cool. Edge alert. Bitcoin extends its sell-off, downside targets. That's so sick. Cool. I love it. That was such a nice chime, too. That's so fun. They're always adding so many cool things to this show. Yeah, I need a little lower before I'm willing to scalp that. The other thing about trying to find like, a place to get in is, how many points do you even have on the board to take? So if I don't get in down here, 20 points back to the middle, it's not that far. Yeah, so there's just not enough meat on the bone for me to even think about being in a position at the moment. Yeah, hit the like button for Jim. Yeah, Ryan, I like to look at the 30-second opening range for London just to get. That's just like my extremely lazy prep for, okay, what did the overnight do? I just can pull up that zone and then get a picture. Like, did that zone serve as a pivot, high or low? Is positioning long off of it, short off of it? Is it super far away? Are we opening right at it? So, like, all those different things just give me a little context coming into the day. So, like, right here, like, we opened right inside of it. And then, like I said earlier, it wasn't really much to read off for me. So if there's nothing to glean from it, that is also a clue to me. So that could give me the clues I need to be a little more patient. If the London session was choppy, need to wait extra for somebody to show their hand, that sort of thing. Rogue shots. Do I use value area high and value area low for entries? Sometimes. I just look at the volume profile, value area high and low, just to give an idea of what's going on. I don't know. No, I don't. No, not really. I don't really use those for entries. No. It's good context, but that's it. Oh, sure, Ryan. No problem. JD, no, I didn't get the 30-second opening range from PAX, but it's just a good way to look at any market session. And it's a very effective tool. 30-second opening range for NQ, also great. That's been used for an extremely long time. I believe PAX refers to it as the only opening range. That's just some old school stuff. Omni, I'll just play along. I just pick one side and go with it. If it's going to be a balanced day, I just choose the easier side, which for me is just to be long. It's too much work to try to get into what. I don't know. This looks if it was the opposite, if this has a slight slope to it. You can see the bottom band is kind of sloping. We're above the open. We're above the London 30-second range. We're above VWAP. Like those things, we're spending more time above than we are below. So that's also why I'm leaning long. Not to say that I'm leaning long to get out of this range, but if I'm going to scalp two-way tape, I'm going to pick the long side because that seems at least to be the most dominant in the couple hours that we've been trading so far. Oh yeah, JD. I use the like I said for the London thing, I just put 30 seconds on there just so I can see the zone, the range of what their opening print was. I use the 5-minute opening range more actively than any other opening range. And then I also use the RTH open print itself. And I like to do, actually, here's a little bit. Here's a tiny, tiny bit of alpha maybe. I like to do where is the opening print inside of the 5-minute opening range. And, occasionally that can also give you some clues. Like the opening print is almost at the bottom of the 5-minute opening range. What happens if it's up here? I don't know. Look at those. If you want to go through, if you want to have some chart homework for yourself, go through some charts and see if seeing where that RTH open print is in comparison to the rest of the 5-minute opening range gives you any clues. Yeah, Logan, I used to do it for the Asia session too, but I just don't. I found that was actually it started to annoy me, so I took it off my chart. I still have it on for ES, but I took it off the NQ chart because sometimes that thing is just ridiculously huge. Like I imagine if we go back to the 30-second opening range for today, it's probably like 100 points, like this whole mess of things. So yeah, I just don't. I don't pay attention to that one anymore. Yeah, but I mean, please don't take that as a negative. Whatever you use and it works for you is awesome. Do I still expect the inventory correction from Globex? I don't know what you mean. Etienne? Can you explain? Can you ask your question a little differently? I don't know what inventory correction would be. Do you mean like to retrace to the Globex Open? I don't know. I don't personally expect anything because I don't have a clue what's going to happen. I mean, price could literally never ever go higher than it went today for the rest of for the rest of the time, and I would have no idea. Yeah, no, I don't expect it to do anything. And it's not great it's not great for longs that we're just spending all this time down here and we haven't been able to crack above these highs. You can kind of look like all these little wicks. See, we keep rejecting off of that. So not really great for longs. That's fair. Yeah, it's definitely not the best session for anybody. Super slow, not very clear. We haven't even gotten to a proper edge of this thing yet. So I can't even try to get a fade in for an edge. I'd much rather be long off this. This at least seems to be some excess here. He's definitely putting in a bunch of volume up here though. So making this mini node. I don't know. It won't go down far enough for me to buy it, unfortunately. Not yet. I'm sure as soon as the stream's over, I'll get an entry. These have been aggressive sells off of this 125 spot, though. I'll have to keep getting bought back up. JD, you looking at single names? Yeah, that's also something I don't do. I would just rather not. Too many inputs, That's a big thing for me. I try to limit my inputs as much as humanly possible because I'll get interested and then I'll try to start to figure it out. And It's just like this. It's just like the Fed trading cards. Once I get an idea in my head, then I'm like, oh yeah, okay. That's fair. Last resort. I get it. But this actually led me to go buy some baseball cards last weekend, and it was sick. Oh, actually, okay, yeah. So if you don't like baseball cards, that's fine. But I pulled this one I wanted to show. So this was sick. So this is how cool baseball cards are. They do. Jim, what's up, dude?
You,
I was just showing everybody this baseball card I pulled. They're putting players' jerseys inside of baseball cards now, man. It's crazy.
dude, your Fed cards are the greatest thing I've ever seen.
Did that
I'll
bring you
make
some
this,
joy?
I'm going to make this commitment publicly. Anything I could do to help you in this endeavor, whether it's finding stats out, going back in history, I'll send you dough to print if you want. This is unbelievably cool.
All right, cool. Jim's in, everybody. He's
I'm
in
in.
officially.
I'm in, man.
Awesome. Cool. How you been, brother?
Good, man. It's good. I feel good. I'm glad to be here. Missed you last week, man.
Yeah, same. Yeah, same.
So I think Pierogi Fest is going to happen this weekend, I think.
Ooh, really? Okay.
Yeah. So it's got a
I
little
love it.
backlogged with Junior was in town last week, and um, Mama Cags just loves to cook for Junior, so she cooked every night.
That sounds great. We actually had a new pierogi place open really close to us that I'm going to try. Every time a new pierogi place opens up, it's kind of like, you got to go check it out, see if they're legit or if they're just using, the generic store ones. So maybe I'll do that this weekend too. We'll see. We'll see what they got.
That's all. Do you go online and write a review then? You're like, all right, this is manufactured in a plant in Mexico. This is not legit.
Yep, that's right. That's right. You need it from the little old ladies, and they need to be rolling it in a church basement. There's a lot of qualifiers to a good pierogi.
Oh my goodness.
This Scott guy keeps telling me to protect my intellectual property, which is these Fed cards.
I claim no stake in this operation other than to be helpful. I'll publicly state that.
Scott, do you really think that it's possible that someone will steal this idea? Maybe. If they steal it, at least I could just buy it instead of having to make it. Then we could just have it that way.
Good. All right. No. Well, Stowe, that was awesome today. Are you back this afternoon?
Yes, sir. I'll see you this afternoon.
Who are you with?
XY today. Pretty sure.
XYZ from LA. Awesome, man. Yep. All right. Cool beans, brother. I'm going to do a quick edge report and we're going to wrap it up for the morning. I appreciate you as usual. You were awesome today.
Thank you, dude. I'll see you later, chat. Thanks for hanging.
All right. Oh, hang on a sec. I got to do some manipulation here of the buttons. There we go. All right, let's start with the Bitcoin. This is an interesting market today. We talked about this earlier with Tracy, and I'm just going to pull up a 30-minute chart here. And, we're thinking about the correlation between equities and interest rate products and this relatively new asset class called cyber currencies. And this is a really nice market to look at. Today, we had a really orderly sell-off. This was an orderly sell-off. There's not a lot of giant candles in this thing. Maybe the biggest candle that we saw was after the initial balance earlier this morning. We went south of that 105 level, 105,000 level. Today, and we're still going. It's just still kind of trickling down, and that's when you saw that edge alert. I was like, all right, what's the target on the downside? Well, we have an S2 target on the downside, and there's not a lot of stuff on the downside, but that's at 103,570. That's a pivot number, and then a little bit lower than that is at 102,500. And that's zero DTE call and resistance. So this is marching to its own drummer a little bit. It's a little out of sync with what we thought would happen with relationship anyway to the stock index futures. And look at this VWAP. This volume weighted average price is so perfect. I mean, this is the session VWAP, And literally, yeah, we have one candle that actually closed, maybe two candles that closed above it. And this was like at midnight, right? And then all of a sudden, the orderly sell-off happened all the way, including throughout the London initial balance. And then the US initial balance followed suit. There's been no buyers today. So, and look at how much separation we have between that session VWAP and price right now. It's pretty big. So, again, sellers are in control of this market. Wouldn't try to pick bottom today anyway, in my humble opinion. We'll just see if it's a little bit of a risk-off move going into FOMC tomorrow. So that's the story on Bitcoin. And just running over to that 30-year bonds while we're talking about risk on, risk off. Surprisingly buoyant today. Buoyant's going to be my word of the day, and it's a little bit moving on the upside. A 113 handle again. We talked about this yesterday. Again, this is the 30-year Treasury bond. Awesome market to trade. We're at the top of the value area, the session volume profile right now, just sitting there right there at 113.09. We did have a crazy wick up here, probably associated with the economic release. And to be honest with you, there's a bigger reaction in this market to that economic release at 8:30, the retail sales, than there was in the equity markets. And so this is market still kind of jittery. It's still kind of spooked a little bit, but it's trying to fight off the mat a little bit as we're railing back up. R1 is the next target up here. That's 113, 30 seconds. And 1 day max 113.16. A little bit higher is that previous session's highs. It'd be a stretch to get there today, but it looks like we're trying. We had a nice retracement back down. We tested some lows here, came back up above that VWAP, and things are moving. My stochastics, by the way, are starting to move up. And I did a minor modification on my stochastics for people who are using oscillators. I'm using an 8 period and then 3 and 3 for the smoothing. And it's given me, I think it's more sensitive to the intraday charts, whether you're using a 30-minute or a 10-minute. Remember, on the daily, I'm out of the can textbook, 14 period stochastics, 3 and 3. So that's just an in-house adjustment that I've recently made, and it's starting to provide some fruit here, yield some fruit here right now, because I'm looking at these crosses and these movements and the slopes as well, and it's giving me some nice direction there. Lastly, but not leastly, let's just go ahead and check out the E-mini S&P September contract, 886,000 contracts versus 515,000 contracts for the June contract. And just drilling back to that daily chart here, all the trend is up. We have moving averages moving up to 8, 21, 50 EMA. Stochastics are slightly pointing down on the daily right now, right below that overbought area of 80. We're tracking 78.1. And then intraday, though, this is really, really what I wanted to show you. Perfect volume profile. This is perfect. This is Gaussian, bell-shaped distribution, point of control smack dab in the middle, more or less. Really nice price happiness right now. And this is telling me this marketplace is waiting for Wednesday at 2:30 before we get it too far out of whack right now. Again, I've been proven wrong before. We've had breakouts and breakdowns at the end of a Tuesday before a Fed meeting, but right now it seems like price happiness and the September contract is sitting at 60, 70, give or take a couple ticks. All right, that wraps up today's Edge Report. I want to personally thank everybody for participating. Best chat, best guests, best contributors. Appreciate everybody being in here. Chris, good to see you, brother. Chris is in the chat as well. Firmament, Theo, everybody across the board. I don't have time to name everybody's name. Mark, good to see you from Northwest Indiana. Thank you for being here. It's because of you that this is really special. Having said all that, I will see you this afternoon. Me and Shai are doing the Hot Commodity Report. We're back 2:30 East Coast time, followed by Stowe and XYZ. In the meantime, grab a nice lunch. Take it easy. We'll see you this afternoon.